Hello, good afternoon, and welcome to Casa do Seguro House of Insurance, a strategic hub of content, entrepreneur connection, and businesses created to promote the role of the insurance sector towards climate transition. My name is Laís Santos. Thank you for being here. Let's start this afternoon with a panel called From Knowledge to Action, the Financial Sector's Journey. Throughout 2025, Ambima, CNseg, and FEBRABAN joined efforts in a joint agenda focused on capacity building and the development of financial sector initiatives in preparation for COP30. This panel aims to present the main results and key deliverables achieved by each organization over the year, as well as highlight the joint initiatives that strengthened the integration of Brazil's financial system around the sustainability agenda. In addition to revisiting the main findings and lessons learned from these initiatives, the panel will also discuss future perspectives for upcoming years, including new areas of collaboration and institutional partnerships aimed at advancing the climate and sustainable finance agenda in Brazil. I would like to remind all of you that all these sessions and panels also have simultaneous translation. The headsets are available near the entrance of the auditorium. Feel free to get it if you need it before we begin our activities. And the complete agenda for Casa do Seguro at COP30 can be accessed at casadoseguro.org.br or through the QR code that you can see right now on the screen. Now, to kickstart the panel right now, I would like to invite to the stage Thais Tanus, Sustainability Assessor for FEBRABAN. Now, I would like to invite to stage Cláudia Trindade Prates, Sustainability Director at CNseg. And Kaka Takahashi, Director of Ambima and Coordinator of the Ambima Sustainability Network. I hope you have a great panel. All right, everyone, good afternoon. It's an honor to be here with all of you for another day here at Casa do Seguro, House of Insurance. Thank you, Claudia, for welcoming us. And well, the idea is to have sort of a roundtable, a discussion with Ambima, Femabran, and CNseg in order to share a little bit about these new experience of working together throughout an entire year with this preparation in anticipation for COP30 by joining our sectors, banking, insurance, and capital market, while looking at this agenda in common that encompasses the entire Brazilian sector. So the invitation was really welcomed in the start of the year. We were already anticipating for COP30 what we would do, what each of us would do. So we had this idea of working together. At the start, we didn't know if it would work or if we wouldn't find ways to collaborate. But we finally arrived at this proposal in having this capacitation and training journey that encompassed joint representatives of all three segments so we could have this common thread in which we base to create the climate mitigation journey, a document that Ambima helped us translate into Portuguese. And so we structured a series of training sessions, 6 throughout the years, in which the main idea was to have this content pill at the beginning of the training, 30 minutes, half an hour, in which we're working with topics like biodiversity, double materiality, transition plans, governance. So we could bring this outlook and cases that would actively represent what each element from the sector would be working on these themes. So this was a very nice experience. We had that already established work group that we sat down every week. All the team is here as well, the team that helped us to organize the content. And well, then we had the 6 training sessions throughout the year. We're able to reach over 1,300 participants with very amazing scores. Our worst grade, I think, was 9.4, and we were able to get 9.9 at an event with over 400 people. Besides all of that, the results on the other forums that we participate and definitely shown as being truly a new experience in Brazil, the financial market, and around the world, and how we can do things together. And we can definitely reach further and we can get further together with the results that we intend to reach at the discussions at COP and the discussions that go beyond COP. Now, let me invite Claudia and Kaká to also tell a little bit about the experience from their perspective. So once again, thank you for the partnership. We hopefully want to do a lot more together on the next years. Thank you. For me, it's also an honor to be here with Kaká and Thais. This is a work group. Our teams talk constantly, and the interaction was definitely important, not only for the joint force, but it was the entire anticipation to COP and the financial sector, like the capital market, the insurance market, the banking system, have a lot in common. So for this agenda towards climate transition, we are gathering all the good practices, all the sustainability agenda and topics. So we wanted to get all the teams with the financial sector that were ready to COP to talk about climate at the same level. At COP, since we talked about the use of double materiality and many other topics that were already covered, the most important part was to bring the financial sector on board, because together we can do more. Because our clients, at the end of the day, are pretty much the same. The capital markets have the funds, and they have the banks and the insurance companies that have partnership with the banks. So we have to work together towards a climate transition that is just, and we are definitely enablers for that. We are basically helping to enable people through the financial and insurance markets in order to reach the climate transition. And in the case of insurances, not only we had the joint workshops, we also had themed workshops for the insurance sector. We deal with carbon capture, taxonomy, that discuss many other subjects. And I think that training was really important for us to be able to reach COP30, and we have, with a training process that is stronger for the sector. And beside that, we also have the exchange of information. I participated in the strategic planning of Ambima. Hopefully, we can discuss the strategic from the insurance sector with Ambima and Febabran and so on and so forth. We are already talking with Febabran about the education portal, so we can get part of the insurance sector in the portal of education. Hopefully, next year, we'll be able to make that come true. We're already discussing that. We're also discussing carbon inventory, so we can have emissions factors that in common between the sectors. So you see, all this exchange that allowed us to create this journey was really important for us to think ahead. We need to work together, join efforts, and more, the financial sector needs to be a good enabler for climate transition that we need to reach. So, for the future, as you was said while opening the panel, I foresee a lot of projects with FEBRABAN and Ambima, especially through the capital markets, to talk about insurance for catastrophes and how the insurance sector can help create a sort of risk diversification and the market market kept to look at that as an opportunity. The banking system to look at the insurance system to recover risks. And we have talked a lot about how to work together, create workshops together. So I do think that we have a journey ahead of us that is quite extensive. And by integrating the teams was a good decision. So I'm really happy to be here today. We are almost closing here today and starting a new journey. We're closing one and starting another journey in which we're going to be working a lot between each other. So by having the teams discussing and exchanging idea, training methods and experiences, this will only bring positive results for a greener Brazil and a best climate transition until 2050 that we hopefully will reach in the right way. Thank you. Great, thank you. Good afternoon, everyone. I'm also very happy to be here. And, I see this moment as a huge milestone for all the work that has been done for quite some time. And like Claudia has said, a milestone towards the next steps. Of course, that the essential part of it was that, well, you know what? Before I tell you what was good and what's to come, let me say my special thanks. Leave my special thanks to all the teams. We wouldn't be able to do what we did without you and the teams. We're even talking at the backstage about the quality and engagement of our teams, both from Ambima's team and CNseg teams, Febraban's team as well. And we have a lot of people working the backstage. We don't see them, but they are doing amazing work, and they did so far. And again, without these people, we couldn't do that. And we have a lot of people here in the audience, a lot of them. And again, we wouldn't be able to do anything and build what we have built without you. So I leave here my special thanks for you. We are here talking here, but we are basically just holding the mic to convey the message. But we represent a lot of people that did a lot of work backstage. And thank you for doing that in this amazing project together. So, without a question, this first stage helped us learn a lot. And we also learned on how much we still need to learn and what we need to share in order to build things that make sense and that are actually going to help. So we learned a lot about collaboration. We learned a lot about how much education, especially in this space that we are in, will always be relevant because it's always something new that you are learning, that we are discovering. And we have found out how much these connections can help build winning solutions, solutions that can actively change the course and brings us towards the right course in such a challenging agenda that we have ahead of us. So we start with this private partnership that goes beyond towards the public partnership, which is also an important partnership. And we also have learned as financial sector, as an insurance sector, that the public partnership is extremely relevant. We need to be able to count on the resources, the catalytic resources. So alongside the private sector, we can leverage, multiply, and exponentialize all the values that we have in order to make this change possible. So it was also a very important thing to learn. And now I'd like to borrow something that it was said before. And the person who said that is here in the room. She will understand why I'm saying this. We need to understand that that small thing that we do at one end when we're just trying to build a better insurance for a popular vehicle, and when we bring that compression and we see the effects that that have at a chain that is going to result into mitigating and more risk, when we assure that small house that was at the edge of the river that could be dragged through a natural catastrophe, and we can understand what that entails, and we extrapolate that comprehension for the entire chain. Once you get into the financing, that mitigation most likely will bring you a lesser risk, and then everything starts to make sense, a broader sense, instead of the one that we only saw it on the surface when we don't work together and we don't understand the opportunities on both sides. So this is a huge knowledge that we were able to learn, and I'm sure that we'll be able to build more great things together, helping each other more, thus building a better future than we would have even be able to imagine. Let me add something what you said, Kaka. I loved what you said, and I think it gives us a very minute detailing picture, but it makes sense. We need to look at each other as collaborators, how we can work together and bring forward a better future. And one thing that you didn't mention is that it was a journey to build this and all the events that we built together. That's important because sometimes people think that the financial sector does one thing, the banking sector does another thing, but we brought something here in this event that was a very important panel. I wasn't there, but I saw it online. You're here. You're here. Yeah, I was here at Spirit somehow, but um, it was an event that was able to see online that was really important. We brought the public sector to look at the capital market, the banking system, look at the insurance sector, how we are all together and how we can help towards the climate transition. And the public sector could see that. So all these events that we organized in preparation to COP and here at COP together definitely were stronger than we have done them separately. So I really wanted to mention that because that was an important result of the partnership. That's right. That's right, Claudia. And what you all said about our partnerships in terms of team and organizers, but even at the workshops themselves throughout the hours of training and the events during the journey, it was pretty clear to see that when a bank presented a case and then we had a case of an insurance company or from an asset, we saw that a lot of the challenges were quite similar. A lot of solutions could be shared. It would lead to results that would be good for everyone involved. So I think we do have still a lot to learn and share for all these experiences towards a climate journey that is more sustainable for the Brazilian financial sector. And Claudia also mentioned about the partnerships. We did have the support of many other associations, and it's important to say because they were important in building the technical and theoretical piece of the journey and disclosing we had a BVCAP, the Brazilian Association of Private Equity and Venture Capital. We have AMEC, the Association of Investments for the Capital Market, BG, the Inter-American Bank of Development, B3, AFIN, the old National Confederation of Financial Institutions, GFAN, the Glasgow Financial National for Zero Net Emissions, Global Pact, PRI, the Principles for Sustainable Investments, and the Investment Financial Incentive Project from, which is called, by the way, Climate Mitigation Journey. And still, about the results of our journey, I think you all seen a leaflet with a QR code on your chairs. You can check the reports using the QR code showing all the results and all the main insights there. Hopefully, soon we'll also be able to share the next steps that we had ahead of us at COP30 and how we continue this contribution and collaboration for the next years. Like I said, next year we want to have a shared office space so we can all do something together, all the teams in person, exchanging ideas. Exchanging ideas and experiences because every single event, like Thais said, somebody was telling their own experience and then we were sharing the pain points that we have with other sectors. And by the way, I forgot to mention that yesterday we have released a radar for climatic events and the partnership with the insurance sector, which is important to show how the insurance sector is important for the climatic events and also to as a financer for the capital markets. When you're creating a fund and you have projects, then you have a climatic event, and then you have to refinance or you have to extend deadlines instead of having the insurance sectors covering that. So yesterday we were able to show that only 90% of the disasters were covered by the insurance sector. So we have a huge path ahead of us in terms of financial education as a whole, not only insurance education, but education as a whole. And we need to work together because alone, nobody will be able to do this, and we need to show the importance of the insurance sector to the capital market, to the banking system, all working together towards a just transition, because we know that vulnerable population always suffer the most because of the low coverage that this population have, especially in regions in the northeast of Brazil. Only 2% of the population is covered in comparison to other states and regions. So it's pretty clear that we have a lot of work ahead of us. We won't do that work alone, and by cooperating with the financial sector as a whole, we will be able to do that together. And also, there's another thing that I think it's important to mention, that we are very proud, and I'll go a bit beyond our partnership and collaboration, because I need to say that we should be proud as Brazilians, because what we're doing right now is reverberating. A partnership with the financial market, with the insurance market, with the banking system, the partnerships with multilaterals, with the development banks, with the BID, with Ecoinvest, with the National Treasury. So you see, we are an example of how well organized we are, of how collaborative we are, and how we do things together. By understanding the synergies of those in the chain, to effectively find solution in order to implement things. This COP is all about implementing things. So the implementation is only possible by having this spirit. So we should be proud. We should be proud as Brazilians for the example that we are giving them to everyone. And I think that a lot of you might have visited the other zones here, the blue zone, the green zone. And when you see a sign from another country, a country that is from the northern hemisphere, because we always looked at them almost as a stray dog. We always see us inferior or less than the countries on the north hemisphere. So when you see a country from there with a sign that says mutirão, that basically is a word that means collective, a Brazilian Portuguese word, then that is something that makes us very proud. And I wanted to say that because we are part of all of that. We are part of that collaborative spirit, and there is an overbearing spirit as well that is sharing that message to the world, and we should be proud of that. Amazing, Kaka. Also, we are happy. We're happy of the partnership. We're happy with the engagement that we have been getting from the participant companies. And also, all the videos, everything will be available soon in our social media. So you can use as resource with other teams, the teams that are not only for sustainability, since this agenda has always been trying to reach beyond, and the mutirão, the community, the collectives is trying to invite other areas like the risk areas, compliance areas, business areas to talk about this agenda, because again, this agenda is not only for the green team, it's an agenda for everyone, and maybe that will be one of the biggest legacies of this COP, to bring this discussion closer to everyone here in Brazil and all the citizens. And thank you once again for the partnership. Thank you. And now we will be moving on with Unapify. Unapify is a partner of ours. We have an event with Unapify after this panel right here. And we started that mutirão, that collective, before we used that word mutirão, that was for the financial sector. And that collective work brought a lot of results. We'll continue to do more next year. We'll continue with the partnership. And I'd like to thank all of you, the teams that will continue to work together. I remember that Mauri on the last event that we worked together, he was saying that we already knew what time the other worked in their companies, because we're so close and working together that we are so familiar with each other's work routines now, and the entire team is wonderful. Everybody got along great. And it's good to see how we are sharing the message to the sector as a whole. Thank you all. Thank you, Kaka. Thank you, Thais, and you all in the audience. Thank you, Claudia. And unfortunately, we're reaching the end here of our roundtable. But again, this is just the start as well. And my last comment is all the markets are strong. The capital markets is strong, is solid. We have a banking system that is strong, that is solid, and an insurance sector that is solid and strong as well. It's all the fortress that makes us to do things just as that we have done so far. Maybe at the start we didn't believe we could be getting this far, and above all, we need to continue to believe that we'll do more and more in the future. And it's interesting because the word mutirão, or a collective, it's hard to conjugate that word in Portuguese. It's a word, it's a unique word with its own meaning. And that word in Portuguese basically means past, present, and future. And we'll continue with the mutirão, with a collective, and together we'll be able to do more and more than we even imagined we will be doing at the start by ourselves. This is the message that I'd like to leave you all. Thank you, Cynthia. Thank you, Claudia. And thank you all here in the audience. Thank you for being with us. Thank you for building all of this that we have built together. And thank you as well for believing that we'll continue together and stronger in the future. Thank you. Thank you. Thank you for all the participants here in the panel. So, in a few minutes, we will retake our agenda. Just a few more minutes. See you soon. Day of Emissions Net Zero, Natural Positive, and Just Transition. That is they're brought to you by CNseg and NEP5. The goal is to showcase the insurance sector's leadership in tackling climate change and her role as a instrument of social protection. The event will highlight the sector's sustainability agenda in order to reduce society's protection gap and its strategy for a fair, inclusive, and resilient economic transition. To start the panel, I would like to invite Cláudia Trindade Prates, Sustainability Director at CNseg.
We're going to central teams for strategy for transition towards insurance plan, transitioning plan, and the counting of the insurance holder. Talked about nature and the responsibility of the sector, the promotion, especially the gap related to protection that we launched yesterday. The event on climate impact, extreme one, the last couple of years, and the coverage, and it shows the gap that Brazil has, mainly in industries, like to separate in regions. So it's very profound in the subject, deep, and we're going to approach this here in the seminar during the afternoon. We have a long journey ahead, like I said, but we're optimistic that the sector is ready to face this opportunity. The fact that we are here today united from this event from UNAPIFY, we're going to go forward this agenda that we're working with this, like Jogo mentioned, has put to us a lot of times. We're in a lot of events that we're working that wasn't seen in other copies. So we're showing that we have a very important work to do. Only through dialogue and collaboration, like we discussed on the previous panel, and just and resilient. So it's to receive here and an AC that's very nice. And I hope you have a afternoon rich in discussions. Thank you very much. Thank you very much, Claudia. And now I invite to the stage Jessica Bastos. She's director from SUSEP. Well, doing overtime here, but I'm very happy with the space. I'd like to say that starting with the person here, I come here from a background of study economical development and strategies of subdevelopment. That's what I study. And since I started to work, this is what moves me in my work to implement strategy under subdevelopment, especially thinking about Brazil, which is from the global south. That I know that are problems that hit us in subdeveloped countries, underdeveloped countries. We have a COP now in the right in the middle of the forest, the rainforest, an invitation from United Nations and from me. It's a very important step for the world, Brazil, that is. Talking about the insurance regulator, so we can address these problems with these underdeveloped countries. So talk about climate risks. The dealing with the climate risks demands organization, planning, and action. So matters that affects differently the countries and matters has to do with vicious cycle related to development. So it has the climate risk to aggravate problems that are traditional already from countries underdeveloped. So it's very expensive for me as a member of the Brazilian state, how insurance can help to address these problems. So I think it's been a very productive talk, and we're going to be very important in the afternoon. So the insurance market has what has been done, and I've been a major player in this. So very happy to see what's going to happen, and regulated. It's always available for this built our domestic insurance. And I'd like to thank the efforts that CNseg and our market has been doing. I'd like to thank from United Nations. He's always a like BSI and Suzanne participated a lot in this discussion. I think it's a meeting that it's optimistic. This one today. Hope you have a productive afternoon. Thank you very much, Jessica. Now giving sequence to our events, I'll invite Butch Bacani, Head of Insurance from Unit 5. Olá.
To small and medium-sized enterprises. Now, in every session today, we will launch something new to move the agenda of sustainable insurance across different themes further and farther. So, without further ado, I want to start with a presentation about transition plans. And this is something that is an agenda that's becoming really truly global and something important for both the private sector and financial institutions, including insurance companies, but also the public sector. And it's, in fact, it's a priority for the COP30 presidency. So let me share with you the the first gift that we have for you today in terms of how can we move further and faster, how can we be louder, and what can we do more to make sure that the transition is inclusive, resilient, and sustainable. Last year, the UN Environment Program launched a new initiative called the Forum for Insurance Transition to Net Zero. Um, it is something different that what we've done in the past. It is multi-stakeholder. It's not only made up of insurers and reinsurers, but also insurance regulators like Jessica, who spoke with us just to welcomed us today from SUSEP, and other regulators from across the globe. It's also continues to be insurance focused, but it gives us a new model of having a dialogue with different stakeholders, including civil society. And it is a forum that's led and convened by the United Nations through the United Nations Environment Program. So you can see here that the structure of the FIT is quite diverse. And this is also in line with the message that is coming out of COP30 that to make to address the global climate challenge, the nature challenge, it has to be a team. It's a team sport. You cannot do this on your own. So this is a new model of multi-stakeholder engagement in order to drive a more resilient and sustainable transition. So you can see here some of the peers of Jessica from across the globe who are part of this forum, whether it's in Europe, in Singapore, or California. These are many of them are at the level of insurance commissioners, but we also have science, research, and civil society. So this is truly global and truly multi-stakeholder in terms of the structure of the forum. You will also see here that we have convened this group in person several times already. I wanted to show a picture when we were together at the European Insurance and Occupational Pensions Authority headquarters in Frankfurt last July, where obviously one of the regulators and supervisors involved, EIOPA, was convening us for that meeting. The priorities of the FIT are, there's four priorities that we started. And to move the agenda of the transition further, those four are in front of you right now. Obviously, it's important to continue trying and shaping metrics and targets and approaches to the transition. Transition plans is something we will cover today. This cannot be an exercise only with insurance companies' portfolios. It has to drive real world change in the real economy. So engaging with real economy actors is important. And obviously, we need to accelerate and support that transition through insurance solutions. In the FIT, we also know that this is not a static agenda. Everyone needs to learn and upskill themselves on what's happening, whether you're a supervisor or an insurer or part of civil society. We have a knowledge hub to make sure that we continue to keep abreast of emerging practices that are important in shaping this agenda forward. So going to today's topic on transition plans, there are many uses of a transition plan. It's not only for supervisors, it could also be for shareholders. It could be engaging your own employees with civil society, with rating agencies, and what have you. So this is an emerging agenda where having a credible transition plan is a strategic business and planning tool that can also help you engage with multiple stakeholders across the globe. And one of the things that we've learned early in the process, that in order for this to be truly embedded in core business, it has to be part of core strategy, business strategy, and planning. There are different types of transition plans there. There are transition plans. If you've made a commitment, for example, on net zero or a resilient transition, you can voluntarily disclose how you are trying to achieve that commitment. There's also increasingly mandatory disclosure that's required in different jurisdictions. And increasingly also there's a prudential requirement for transition plans where if you are a bank or an insurer, there is a view that having a credible transition plan is linked to the stability and soundness of financial institutions, which is important from a prudential perspective. So when the FIT started work on this, we assessed the whole landscape of transition planning. We definitely did not want to replicate what's already out there. So we've looked at what the IFRS was doing, what the GFANS was doing, what the Transition Plan Task Force in the UK was doing. And so we built on all of those rather than replicate them. And then when it came to granular guidance, we saw that the TPT task force in the UK had done already a lot of sector guidance, including in finance for banking, asset owners, and asset managers. But there was none for insurance. So this is the first port of call for the FIT. We wanted to close that gap. So we have closed that gap already last year in COP29 in Baku, where we launched the first ever insurance specific guide, insurance specific transition plan guidance out there. And that guide showed what are the key features of the insurance business that should be articulated in a insurance company transition plan. What are the different actors, what are the different parts of the value chain that need to be there, and how do you connect climate related and interconnected sustainability issues that are material to your business, be it on adaptation, on nature, the just transition agenda, and also relevant topics like pollution and circular economy. So that gave us a good framing of what are the key features on the underwriting side that needed to be considered. And that report also showed the landscape of transition plan disclosures and requirements happening in different parts of the globe. So that report, by the way, has been the most downloaded report of UNEP-FI across banking, insurance, and investment in the past 12 months. So that means it's getting used by different stakeholders. When we first had the first Transition Insurance Summit, also in Frankfurt last July, we launched the second global guide on insurance-specific transition plans. It's called Underwriting the Transition. And in fact, this second guide is on track to outpace the first guide to be the most downloaded guide of UNEP-FI in the past 12 months. So what we did here was really to go deeper using the globally recognized framework of the TPT and identified beyond the guidance already provided by the TPT that can be used by insurance companies, what are the specific areas where we need more granular insurance-specific guidance? So those are the boxes in green. I'm not going to go through all of them, but basically this is a how-to guide. If you are an insurance company, you haven't started your journey on transition planning, you haven't started anything on the underwriting side, this will give you real guidance on how to go about it. So with this second guide, we have closed the gap in terms of insurance-specific guidance there for the underwriting portfolio. The question now for us was that since many leading insurers have started their transition plan journey on the investment side of the balance sheet, and now there's the underwriting guidance, what happens if you connect the two? Because insurance and investment portfolios within the same company are part of the same company. So this is the report that we will launch today, is what does a total balance sheet transition plan guide look like? So this is totally pioneering. There is no guidance there on transition planning specific to insurance companies that links the underwriting and investment portfolios of insurance companies. So this is the global launch of this guide, and I'm going to go into a little bit more detail into what it has in store for you. So it has 6 what we call total balance sheet principles for transition planning. I'm not going to go through each in every detail, but one is unified and coherent strategic ambition. How can you have one strategic ambition across the entire enterprise that encompasses both underwriting and investment? Mutually reinforcing actions. How can the actions you're doing on insurance complement what you're doing on investment? How can you be coordinated between underwriting teams and investment teams on this transition? How can you make sure that you can do that internally? How can you make sure that you communicate a coherent story to external stakeholders when you engage with them? 4, 5, and 6. Obviously, we need to measure progress. How can you make sure that you have comparable and consistent ways of looking at progress across underwriting and investment going forward? Governance is important. There has to be board level oversight of this transition plan agenda, and also an enterprise wide view of risk and progress. And the sixth principle goes into embedding this overall strategic objective and ambition into capital planning, solvency, and reinsurance strategy. So there's more to it in the guide, but ultimately, what we're trying to do is, how can you achieve cognitive consonance within a company? Cognitive consonance is a term borrowed from psychology, that you want to be able to have a coherent approach in order to have mental harmony. So that's why we're using the analogy of a total balance sheet. What you're doing on investment, how can it be coherent on underwriting, and the other way around? We're not saying that everything has to be identical, but if it's different, you are consciously aware of it. It is well governed. It is intentional and deliberate, rather than negligent or inadvertent. So coherence is important, and in order to get that enterprise-wide view of transition planning. And the goal is to accelerate and scale up a just transition to a resilient net zero economy. So here we're really harnessing the total balance sheet, the role of insurers as risk managers, risk carriers, and investors towards to make that transition even more successful and at the scale that we need, because we need scale and speed right now. Um, when guidance or standards or um, global reports come up, there's always the context and important issue of proportionality. And it's also very much clear in this guide that these principles have to be applied in a proportionate way. Not everyone is a big global insurer and reinsurer. You can be a insurer here in Brazil, only writing motor business. You can be an insurer in Africa, doing only life and health business. So there is the idea that it has to be done in a proportionate way. And there are different considerations there. You can have a business that's made up mostly of micro, small, and medium-sized enterprises. You might have a different ownership model. You can be a stock company or a mutual. So these are important considerations in the guide that also need to be taken when applying these total balance sheet principles. It also shows examples of how you can have levers on underwriting and investment that can connect related sustainability issues. For example, on adaptation, if you have provisions in the insurance contract to build back better and more in a more resilient way, and on investment, you invest also in climate resilient infrastructure. These are totally compatible and very complementary as well. The same for nature. You can develop. Yesterday was a whole topic on nature, which gonna covering today. You can cover different types of nature-based solutions. You can also invest in them. And so it goes on into the different sustainability themes that we're covering today that are also very relevant, that you can see that using both sides of the balance sheet could really be very purposeful and powerful in driving the transition. So what we've presented to you today is phase one of this third guide. We wanted this to be a shared language and direction of travel. This is not prescription. This is not regulation. It's simply principles that we can build on so that we can co-design with different stakeholders next year practical guidance to implement these total balance sheet principles. So we're taking it in a very measured way. We felt that the best way to start was to have these principles that were already within the FIT community and external stakeholders debated. Um, and we will use this first guide on total balance sheet to drive and co-design practical guidance for next year. And we believe this is the spirit of a multi-stakeholder forum like the FIT. And we hope that this is something that many of you will benefit from now, but also be part of next year as we move forward on this agenda. So that's the new guide that we've launched, and you can hopefully read it throughout COP30 if you have time on the details. And I just wanted to show to you why this guide is important, because this is a global agenda already. There's already mandatory or approaching mandatory requirements or voluntary standards across the globe. So this is not an agenda in a particular jurisdiction. This is truly global right now. And if you look at the International Transition Plan interactive guide, they're also showing key trends emerging. Look at that. It's already happening in Mexico, in Pakistan, in Zambia, in Africa. And it's upcoming here in Brazil, I think. That's what it says. And also in other markets like China. There's also a shift to from the TCFD elements to the IISB, International Stability Standards Board. And we know that the TPT, there's a whole alphabet soup there of acronyms. The TPT framework, the transition plan framework, has now been assimilated into IISB. So that's why we built on that. So it's important to make things coherent as well, because insurers can get confused on that agenda. And what they're also sensing is that there's a phase implementation. Normally, it starts with large listed companies, and then the smaller players have a more phased implementation of this, which is also in line with the proportionality principle that we had shared earlier. And if you look at the whole alphabet soup of disclosures there, this is what the FIT is trying to do. We're trying to help an insurer be able to um, uh, navigate that landscape. So if you are just starting on transition planning, now you have global reference to get going, even though and transition planning is an iterative exercise. It's something that's continuously done, but it's we now have enough so that you can get going, and then you can then look into the different frameworks where you can apply this guidance. To link it to COP30, this is the letter from the Brazilian presidency last August. And you can clearly see that it's a priority for the COP30 presidency. And then an extra for you, for extra recommended reading, the International Transition Plan Network now has just produced last week two new research publications on the importance of sector transition plans, um, on how this could translate national ambition that could support companies and investors in the ambitions of different countries, and how private sector transition plans can enable and unlock capital to support that transition. So you can see that what the FIT has produced goes into a wider international architecture of transition plans that's being now developed across the globe. Finally, just as in case that you may have missed it, the FIT also, before COP30 last week, launched a insurance communique, um, show saying that there is a looming insurability crisis that we should be mindful of. The reason why it was issued is because this community of insurers, of insurance regulators and supervisors and civil society have sensed that it is a growing issue across the globe. We covered it on day one of the summit. And we believe that if we don't address climate and nature risk from a whole of society perspective, then that insurability crisis could become bigger and it would undermine the transition. So if you haven't read that communique, have a look at that right now. So that's the first of three things that we will launch today. And now we can move on and to discuss how different organizations are actually implementing or viewing transition planning in their respective markets. So I'm going to call our distinguished panel. We have Catherine Chazelle from AXA. We also have Jessica from SUSEP. Patricia from Porto Seguro. I'm so happy to see you again. I haven't seen. Yes, we've missed Patricia a lot at UNEP, but she has been always active, even at the Global Steering Committee of UNEP Finance Initiative. And I think we also have Claudine Blamey of Aviva online. Are you online, Claudine? Maybe she's. Oh yeah. All right. Claudine, can you hear us?
Yes, I can hear you. Yeah.
Yes, you're hovering over us, Claudine. And so, welcome, Claudine. Since you're there, and I know it's getting late in London, it's early evening, and I don't want to take too much of supper from you. Um, why don't we start with you, Claudine, and share Aviva's perspectives on transition plan and your own experience?
Yeah, sure. Happy to. Hi, everyone. It's afternoon, your time. But yeah, as Rich said, it's evening here in London. So I think, for more than 300 years, Aviva has been helping our customers prepare for the uncertain, the unexpected, and the unprecedented. And I think climate change and nature degradation are widely recognized as a critical systemic risk. And that is seen by our businesses very much as that. And they're not just risks for the distant future anymore, but we are recognizing that the realities is that they are here and now. We have clearly seen the impact of climate change and nature degradation on our customers' lives, things like floods, wildfires, other catastrophic weather events. They're just no longer a distant possibility. They are hitting our bottom line as well. So there is something that is recognized as a business reason why we are doing things that will help mitigate these risks. So as an insurer and a long-term investor, we have an important role. And as Butch just said, it is both those roles to help our customers manage these risks with climate change so they can approach the future with a bit more confidence. However, we're just one player in a kind of a global system, and it's really important to recognize that we can't achieve the transition alone. Only through collective action we can do this, and you can see that through how you would approach your transition planning. And we see transition planning and plans as not a nice to have, but really a need to have. They are, I think, the vital bridge between our ambition and the actions we're taking across our whole business to ultimately drive that ambition forward. We published our first transition plan back in March 2022, and we have since met our key near-term ambitions that was in that plan. So we've also helped shape the wider ecosystem of transition planning through our CEO co-chaired the UK Transition Plan Task Force framework, which is something that we followed to do our second transition plan, which we published back in February this year. I think just to say that that second transition plan has come a long way since the first one, because we've included nature, we've included just transition as an element of that. And we haven't called it a climate transition plan. We've called it a transition plan because it includes all of those other elements as well. And I think just lastly, ultimately, transition plans ensure we're not just making promises, but we are action orientated. And this will help us deliver measurable progress with our shareholders, with our customers, and our broader stakeholders and our communities. I'll stop there.
Thank you so much, Claudine. And it's very interesting that Aviva already published its first transition plan, if I heard you correctly, in 2022. That was 3 years ago. I can safely say that the vast majority of insurers across the globe have not yet done their first one. So, Claudine, maybe just to get a little bit more insight from you, from the first one in 2022 to the second one this year, what are the key things that lessons learned? Because transition planning is supposed to be an iterative process. You don't do it once and it's done, right? It's something that you continuously review and assess. What has been that journey from 2022 to 25 for Aviva like, and what have been lessons learned and key moments for you?
So I think there are a few things. So we've moved on quite a bit around how you implement internally. I think that's the biggest change. The first one was very close to when we announced our ambition. We announced our ambition to be net zero by 2040 back in 2021. So only a year later, we published our first one. And then I think this is credibility. So really having a credible transition plan, you have to have that kind of ambition, action, and accountability. And I think we've been really working on the action and accountability elements of this. Our plan covers both sort of investments in insurance and our own operations. So it's all encompassing. We've, since sort of the first one, we've built robust governance, particularly with senior leadership oversight and board level training, so that they understand when we talk about these things, even technically start to talk about these things. You know, what is just transition? What does nature mean to us? Why is it impacting our business? What do we mean by net zero as an insurance company? All of these things we've had to take the board through a journey for them to understand, and then be able to sign papers off when we bring those kinds of papers, or sign off targets when we bring those kinds of targets. I think also we have integrated much more into the business and given different business areas responsibility to deliver on these things as well. So really building on how do we make things happen on the ground, whether it's new product development to help the transition, or it's engagement with governments to develop the right policies. That's kind of what's really taken place since the first one.
Thank you so much, Claudine, for that. And it's really insightful because it's also, I think, very honest that the board has to be upskilled and to make sure, do you understand what this is all about? What is just transition? What's net zero? I think it's a very important insight. And I think you've also amplified that this has to be embedded into core strategy and business to be really purposeful and successful. Why don't we go to the other side of the panel and have another global insurer. We have Catherine from AXA. who's joining us today. Catherine, what's the view from AXA on transition plans?
So thank you for having me. Good afternoon, everyone. So of course, I'm also very aligned about the urgent stakes that we are facing regarding climate change and a fair transition that was just shared by Aviva. So to tell you about how we are doing it at AXA. So at first, let me highlight that sustainability is included into AXA's business strategy. So it is the first pillar of our strategy. And within this pillar, we have two priorities. First one is climate transition, and second one is inclusive protection. So we are, I think, at the core of the topics that we want to discuss today. Regarding climate, so of course, the decarbonization plan and decarbonization targets are very important. Our objective is really also to go beyond and to have a more comprehensive plan in order to support our client to transition and to also adapt to climate change. As an insurer and an investor, we'll come back to that also. We have really a key role to play, both as a risk manager to decrease risk and to support our clients, but also to raise awareness and help them to adopt more sustainable practices. So we are doing really this, developing this pivoting role, and that's one of the future key actions that we can develop as an insurer. Regarding inclusive insurance, the objective is to address social gaps in insurance and also to develop a fair transition, because there can't be a correct climate transition plan without overseeing social challenges. So to do that, because we would like this COP to be the COP of the implementation, how we are doing that at AXA, we developed the AXA for Progress Index. So it's a set of key strategic indicators aligning our key targets as an investor, as an insurer, and also on our own operations, because we have to be to act as an exemplary company. So I don't know, Butch, if we achieve your ideal of a coherent transition plan for all activities, but that's the way we are doing it for many years at AXA, and trying to set homogeneous targets depending if we are doing it as an insurer or as an investor. Perhaps to give you a free example, as an investor, we took a commitment to invest in community resilience for communities facing challenges of climate change. As an insurer, we have another target to deliver 9,000 services for corporate clients to help them to adapt to climate change. And because we can't move forward without upskilling our employees and also to raise awareness among our clients, we have an internal objective to train 80,000 AXA employees before 2026 on adaptation challenges. So that it's not only the objective and the challenge of underwriters or experts in sustainability, but that all AXA professional families and also marketing teams are trained and upskilled on these key topics for our business. So to do that, of course, it means a huge internal transformation that we should not undermine. If we want to talk about implementation and concrete results, it's not like something that we can decide at group level with strategic targets, very ambitious, of course, science-based and content and transparent. We have to really work a lot internally, and you raised that early also at Aviva, so that to adapt our governance, the way that we are working, we witness really and of course fostered the professionalization on sustainability from all our professional families, investors teams, underwriting teams, so that we can lead a coherent transition plan that onboard all our activities, but also all our entities. So it's a beginning of a journey, and we have still a lot of progress to do, but it's really a strong ambition that we have at AXA to onboard all these populations. And perhaps to end on the climate transition plan on itself, so it's a way that we can communicate and report our progress. In Europe, we have this CSRD regulation. So the climate transition plan has become mandatory. We published, for many years, we are publishing climate transition plans, but last year we published it for the first time according to the CSRD requirements, which is quite demanding. But that's a very good opportunity to be transparent, to be accountable, and also to align our practices depending on if we are acting as an investor, as an insurer, on our own operations perimeter.
Thank you so much, Catherine, for those insights. And in many ways, you were also complementing what Claudine was saying at Aviva. And in many ways, I'm happy to hear that both Aviva and AXA are to a certain extent are living those total balance sheet principles that we had and I know it's a very dynamic process. It's also interesting that, Claudine was talking about upskilling the board. You're talking also about upskilling the workforce of 80,000 people.
Yeah, we also upskill the board. We're trying to upskilling everyone. So
yes, in addition to the board, you're also showing that which is very interesting because I think you were saying about adaptation and resilience. A bit of my observation, at least of the financial sector, when you talk to investors and banks, they are probably a little bit more familiar and a little bit more sophisticated on greenhouse gas emissions reduction and decarbonization. Insurers are a little bit more familiar on adaptation and resilience. And on the other way around, normally investors and banks can learn a little bit more from insurers on adaptation and resilience, and insurers also need to catch up a little bit on how they can support decarbonization. So an underwriter on climate would normally look at hazard exposure and vulnerability, and now they have to look at scopes 1, 2, and 3 emissions, for example. My question is, how is that transformation happening within AXA? Because there's a lot of things here, and that's just one angle. If you talk about the concept of a just transition, which you're going to cover later, that's another thing. And the next panel is about nature. What has been the reception in AXA about, the different employees who need to now be upskilled on this? And what have you sensed internally?
Well, it's true that the really first objective that we communicate at AXA 10 years ago during for the Paris Agreement was when AXA announced the divestment from coal. So it was a commitment that we took only on the investors' side at first, and then we enlarged on our underwriting activities. The challenge with the underwriting activities is that, of course, we have it's really more decentralized than the kind of commitment that we can take at group level on the investment side. So we can't move forward if we have not upskilled and convinced the underwriters to develop different types of offers, different services. I quote the example of the 9,000 services to support the adaptation of our clients. It's very new as a commitment, and the first step is to raise awareness among our clients, because we can't insure risk that our clients have not in their mind. So this is really this first step. So to come back, how we do it internally, we now have dedicated sustainability teams within the insurance side and also in the investment side. And the insurance team, and I think that you will interview later on Aurélie Fallon, we launched an internal expert network gathering underwriters from all AXA entities to make them move forward on their local markets to develop that kind of new kind of offers and services. In your introduction, you were quoting the complexity of an insurance group. It's true that depending on the country where we operate, we can either provide only life insurance products, sometimes health products, and otherwise it can be car insurance. So it can be very different, and it's different. The challenges and the expectations from our clients need to be addressed very specifically. So within this expert network, which was launched like 2 years ago, It's the new way that we can impulse and support the change within IASA.
Thank you, Catherine, for those insights. Now let's go back to Brazil. And it's good to be reconnected with you, Patricia. And I'm happy that you're on stage to talk about this topic. I'm really keen to hear from Porto Seguro on your views on this. And to all of you watching, none of this is choreographed. So I'm really hearing this for the first time. So I will be an active listener.
I know. Falando pouco da Porto, eu acho.
Look, to speak about Porto a little bit, I think it's important to mention that this is a company that has been working for 80 years, and that most part of its journey was working as an insurance company. It was only in the past 5 years that we strengthened our health businesses, our banking business, and also our service businesses. So when we talk about enterprising, about groups, now we have different type of businesses, and so exists and brings all the different challenges of coordinating everything. So that's an important thing that I needed to mention. Now, every 5 years, we do a strategic review, and we are now in the 25-30. And what was important for us is that in this past cycle, it also coincided with the division of our materiality. So we have enjoyed this opportunity for the strategic review of the company to review our materiality with the double materiality that is now current. We have assembled a sustainability commission because we already have a committee, which is the committee that works for the board, but we also created a commission for sustainability and a commission for diversity, in which the participants are the business leaders. So you see, we have the CEO of the insurance company, we have a director of the financial services for the bank area, the director of products for health, the director of operations, 2 directors of operations in the part of services. So the people that deals with the governance. So it's a multifunctional team that leads this agenda alongside the sustainability team supporting them. So you see, that really changes the dynamic because it's pretty much everything being born integrated. So the strategy was led with that group, with us giving ideas and insights. And on top of that, we have already established goals, both public goals and also internal goals in terms of management. And in the double materiality, we also identify this big narrative of sustainability of Porto that we call Regenera. And Regenera has 4 big pillars. First pillar is to work with developing human capital and inclusion of new revenues. The second one, climate change and circularity. The third one, products and sustainable solutions. And fourth, the engagement of the value chain. So there are 4 pillars, and all the strengthening themes from the double materiality were decarbonization and the emissions of greenhouse gases, the part of sustainable investment, and we also worked with circularity. So that's where pretty much the 3 materials that we have strengthened under the strategy. And this year, we already started some very important initiatives. The first initiative was when we measured our emission of greenhouse gases, scope 3, category 15. We were the first insurance company in Brazil to do that type of inventory, and that's a huge foundation in order for us to work towards mitigation and adaptation, right? So we did just that using the global PCAF methodology. So that was an important initiative. And when we work with the public goals, I will also highlight circularity, because we have Renova, which is the company that today is the only leading company in terms of circularity for vehicle parts. So we have a big goal in finally use these parts that can be recycled from vehicles, and we have a goal in order to double the amount in our capacity alongside another initiative from the government that it's called Mover. So these are other 2 examples on the difference that can be done when we put the business, and we use the business to lead the agenda and the indicators that were established, all of that alongside the strategy of the business. So, when I looked at what he was showing, all the framework that you did, I thought, oh my God, that's exactly what we're following right now. I was texting all the time, VV, sharing how proud we were of our journey.
Thank, thank you so much, Patricia. It's great to hear that in a way that you can be a global and highly diversified insurer like Aviva or AXA, and you can be a local insurer like Porto Seguro and exercise leadership on this agenda. And I think you're doing that at Porto because you're a first mover in different ways on this agenda, including measuring your insured emissions, scope 3, which is not easy if I have to, and it can be challenging, but perhaps also similar to the questions I had for AXA and Aviva. uh, Not hopefully things have gone smoothly, but not it's not always like that. Can you be a little bit more, share a little bit more insight on how that engagement internally uh, has been for Porto, and what are the key insights you've learned that perhaps could be helpful for others to hear? Because it may seem that when you listen to the three speakers, like everything is sorted, but it's been a journey actually for many to get to that point. So it might be good to hear a little bit more, Patricia, on that journey for Porto.
Sim, e é bem importante falar que
Definitely, of course. It's important also to say that this is quite of a recent endeavor, right? Porto has as its values the care and the social responsibility. So it has a very strong way of acting that way. But with this integration in the business, this is very recently, very recent. We're talking about in the past 2 years. This journey has only been working for 2 years, starting 2 years. So what I think was some of the biggest different things for us to do this journey is that, number one, we have a company that was already engaged, because when you look at Renova has been working for 12 years. For 12 years, we sort of have a business that working with circularity, right? So when we see a lot of initiatives from sustainability, but now finally at a more structured manner and better integrated the entire business, this comes from a board that is very present and very active in the agenda. This was possible because of a renovation of sustainability committee in which we were able to bring external expertise that helped us with this engagement. So that is an important aspect too. And we also got all this sort of window, this time frame, that was the revision of the materiality and the possibility to revise the strategic plan. So we thought it's like a surfer, right? You're looking at the waves and then you look at it and you think that's the wave, that's the right wave. And we found the right wave at the right moment. So we look at the board, we look at how we would change the sustainable community, the strategic review for the company, the strategic of the double materiality, alongside the commissions that we told the company to do. All of that was able for us to create this new pathway, and now we're trying to move along faster in this path. Now that we were able to create engagement, we're finally able to add speed to the agenda.
Great. So happy to hear that. It's also very inspiring to hear the Portos story. So more power to you. So and
To
last,
us.
and last but not the least, Jessica. Jessica and I were together actually in Europe not so long ago. We were together in a Salzburg Global Program, a residential program on how to build resilient communities, right? And so I got to know Jessica a little bit. It's great to be reconnected with her in her home country. And I wanted you to absorb first what different market participants had to say on this. And I'm sure there must be a lot of insights from you on this agenda. It would be good to hear a supervisory perspective on transition plans.
Ótimo, foi ótimo ouvir todo mundo antes
Yeah,
de
you know,
falar.
it was definitely great. Definitely great to hear everyone first because I was able to hear from international groups of insurance companies and a local insurance big like Porto talking about the difficulty engaging their teams, their boards, and etc. towards this agenda. And you can imagine how hard it is for the regulator to engage because we deal with all of you as well and your employees. So we also have that challenge ahead of us in terms of engagement. I assume that this is not a problem only for the Brazilian regulatory agency, but we have a very heterogeneous market. So it's hard to engage, especially considering the different players and stakeholders in our market. We also have this protection gap that is quite big. So it's a challenge to think in creating different rules and directing the market without at the same time creating barriers that can hinder the competence. So we ended up not creating the protection gap. So a regulatory agency has all these challenges to keep in mind. Now, with that being said, I don't think these are impossible challenges. Not at all. I think this is a good challenge and a good thing to reflect upon. And I think that Brazil has been following a growing agenda. The Ministry of Treasury has launched a ecological transformation plan at a national level, divided for many different axes from the productive sector to the financial sector. So SUSEP is inserted amidst that macro national agenda, and it was able to ride that wave and pick up speed on working in that agenda alongside the government. So we had that easiness from that recent agenda from the government. And some of the deliverables are also very important as well, because most recently, the government released the Brazilian taxonomy, sustainable taxonomy, and that is going to help feed data and information to us so we can again continue to reveal our regulatory framework. So, and I also heard you talking about the necessity of reviewing your transition plans, coming back to it every couple of years or every 5 years. That is also true for our regulatory agency. Our first most robust norm was the Circular 666, which is going to be 5 years already. It was the first norm that makes the sector look at their climate risks and manage those risks, to have a board on those risks. So we were able to build their climate risks within the companies and its relevancy, but it's just the first steps. And that's about risk management. Then the regulator starts looking at the conduct to avoid greenwashing, to work in their transparency, label products correctly, to make sure that the insurance companies in Brazil can lend their customers expertise on what it is or what it isn't sustainable. Because the rule that we use to classify products, think about the benefits of coverage of insuring products. And then we also have a new rule that looks at underwriting. Then we're talking about rural products and tell them, look at your underwriting if your customer has sustainable practices. So, we're bringing more towards that as well. And amidst all this journey, it's been 5 years. So I think it's finally time to look at our first norm that talks about risk management with all this new path and all this new experience. So it kind of backfeeds, right? And we also see this challenge in engagement. But again, it's a good moment for Brazil. And we need, again, to use this moment to continue moving forward, revising our own framework.
Thank you, Jessica, for those insights.
Obrigado, Jéssica, pelos insights.
So, I remember when we were together in Salzburg.
Quando a gente estava junto em Salisbury, você estava explicando para mim um sandbox regulatório no Brasil e havia essa discussão
is a sandbox. I mean, in the FIT's work on global transition plans, in a way, the FIT is like a sandbox. You can show what's happening in the market on transition plans, and there's consultation with insurance supervisors and also with civil society and academia on what you see. Is that something that you foresee here in Brazil when it comes to transition plans, that there could be some sort of a sandbox where it's an evolving agenda, people are trying it out, and then it will also shape supervision going forward?
Ótima pergunta, Gutia. Primeiro, porque eu adoro falar desse tema.
Good question. I like to talk a lot about it. Thank you for asking. To create this stage for me to talk about it. But we're reaching at the end, the cycle of 5 years, the creation of the regulatory sandbox. And I speak a lot about this. We started the regulatory sandbox as new products related to insurance. But after 5 years, what was clear that we tried our supervision measures and at the end of the 5 years, the 5th year, we realized that we had to look inside and what we had to do in terms of supervision and regulation to direct the market, to induce the market, to create new products, to create new coverages. And it was very productive for us, talking about a country, Brazil, that has a huge protection gap, not even Brazil from an international active group. So there's a lot of space to grow from small insurers and big insurance companies. Sandbox shown that we can think about different models of supervision, regulations, risk factors that are different, to look at the modeling in a different way, to feed this creation of the products that reach the market that are the people that are below the market. So I defend the regulatory, the sandbox. I defend that now. Need to think ahead how it's going to teach us, not only to follow the same policies. Now I have to have a second moment. We need to think about how to finance and financial sustainability and resources, financial resources. We have to new moment to think about it, about a regulation and supervision, we want to think about other things, but it's not serious regulators. We like to follow a bit more.
Thank you so much, Jessica, for giving us more insight on that. And so I wanted you to know that I was listening to you when you were explaining to me that, and I thought it could be something relevant for our discussion. And it just came up when you were talking earlier that maybe I should bring that up because it could be relevant. Claudine, I hope you're there. I'm not sure if you speak Portuguese, Claudine, or if you're using AI to listen to the discussion. But in case you're not, you may have sensed that the discussion has been good. It's all good developments that's being shared by Porto Seguro and SUSEP on this agenda of transition planning and sustainability here in Brazil. Perhaps before I go to the audience, since we're talking about the role of regulators and supervisors, Philippine, are you able to give us an insight in the UK about the engagement of the Prudential Regulation Authority of the Bank of England on this agenda of transition plans?
Yeah, sure. I mean, the PRA has been very proactive, and I think the most, I guess, helpful and forward-looking kind of area that they're focused on at the moment is scenario analysis, and obviously, scenario analysis forms a part of transition planning, and I think that's really important. I think particularly for insurance companies, to really understand not just physical risk, but other risks that they will need to scenario analyze across the different parts of the business, both on the investment side and on the insurance side. So we really welcome that, and we've started on that process with the PRA. We meet with them on I don't know if this is the same for other regulators, but the PRA meets the companies once a year, particularly on climate change issues, which again, I think that's really good and it's really helpful. So I think it's all heading in a really good direction.
Thank you, Claudine. And it's good to hear that there's constructive engagement between market participants and the regulator there in the UK. So I can see that we have 16 minutes and 52 seconds left. I just wanted to check in with our audience here, whether they have any questions for our panel on this really important topic of transition plans. Anyone who wants to be the first for day 2 of the summit? Yes. Please state your name and your organization, please. Oh.
Vou falar em português, tudo bem?
Yeah.
I will speak in Portuguese, okay?
Eu sou Ilana.
My name is Ilana. I'm a cabinet chief from Superintendency from SUSEP. I'd like to ask to you, but I think mainly you presented us all the plans that were developed during this period. Thinking about this moment and COP30, and we listened a bit about the market and the superintendency, but based on the listening of the market and superintendency, I'd like to understand how do you fit that into this program that was created, and what are the points that you understand that are being developed already, and the points that you think that you said to us that needs to be have greater attention. Thank you.
I'm not sure if I caught everything you're saying, but I think you're trying to see like what's happening at COP30 and how much of that is being taken into this. Maybe. Yeah.
Given that I already spoke in Portuguese, I can give you a brief in English. But then, yeah, like you have presented for us all the plans that you have worked with along this time, especially taking into account what you could contribute here, like the COP. And after you have presented that to us, we had the opportunity to listen to the market and also of SUSEP. And then I was like a little bit intrigued about what you were catching in terms of what has already been in action in regard of the planning that you have worked with in this time, and what you think in this planning that is the thing that they should be looking at as the one point that should be more like worked on, like.
Okay, I understand. So for me, it's simple. Yesterday, I was in a meeting at the TED Countdown House and talking to scientists and business leaders. And the title was From Incremental to Exponential, because science is showing that if we really want to turn the corner on the climate and nature crisis, we need to move to exponential change. So for me, what has to happen is that it cannot be a few companies like these on stage and online who are doing these things. It has to be the norm in the global insurance industry that everyone is supporting the transition with credible transition plans. That is what has to happen. We need to accelerate and scale up. Otherwise, if these companies are the exception to the rule, we will not be doing what Laurence is asking us to do, to be louder, to contribute more, and to accelerate and scale up. So I think the basic idea is that with the guidance that has been produced, if you are an insurer, you have already what is there to get going. So we need to just do it. Yeah.
Yep. And perhaps to complement and support you in your answer, For example, as an insurer, we are talking about the measurement of the scope 3 emissions. We have a commitment at AXA to decrease the CO2 emissions of our largest corporate clients. So we have several of them, but let's take that example. It's an AXA ambition, but of course we can't achieve this target without the transformation and the transition of our clients. So our role as an insurer is to engage dialogue and to discuss with them in order to put climate change on the topic, and not only climate change, including fair transition and biodiversity. But we put these new topics of discussions with our clients. And if we want to be efficient and to accelerate the change, I think that these transition plans are really the tool that we have to develop and to make more solid, because we will discuss on the basis of their transition plans. So to be credible and to move forward, it's not only about the responsibility upon an investor or insurer, because it's an indirect support that we can have. It's an important role, a pivoting role again. We want to embrace this responsibility, but we can't do it by ourselves. So if we want to accelerate the change, a credible transition plan includes a very high-level strategy, concrete KPIs, a little bit also of course, pragmatism, because it's not easy to do, and it's, again, not an objective that we can set for many years and then we don't change. But this is the basis of what we can do from our side with our own transition plan, with the transition plan of the clients and companies in which we invested in.
Acho importante também adicionar, cada faz,
I think
né,
it's
o
important
seu,
to add
né,
that everyone should do its
cada
efforts,
organização, cada
each
seguro,
organization,
cada-
each
cada
insurance
negócio.
company,
Mas
each
o
business.
fato, por exemplo, da gente estar
But
aqui
for
no Casa do
example, for us to be
Seguro,
here in
com
Casa
a
do Seguro,
CNseg,
with
compartilhando
CNseg,
as práticas,
sharing the
trabalhando com
practices,
diferentes
working
stakeholders
with
aqui,
different
a gente tem
stakeholders here. We
regulador,
have
como a gente tem a
regulators,
FEBABAN,
like we have
a gente tem a Ambima,
FEBABAN,
os investidores. Então,
Ambima,
assim,
the
esse
investors.
trabalho que está
So
sendo feito
this
na Casa
work
do
that are being
Seguro, acho que
done,
nem a Casa do
Casa do Seguro, it's not
é
even
a Casa
Casa
das
do Seguro,
Finanças.
it's finance house. It's not like
Porque, pelo
insurance
fato da
house, let's
gente
think
estar
about it.
aqui, né,
And for
sendo
the fact that we're
representado pela
here being
primeira vez,
represented,
o
and
mercado
for the first time,
financeiro,
the insurance markets and financing on a
eu acho que
COP,
aqui a gente está dando passos.
I think
Eu
you
acho que o
hear
Kaká comentou aqui, eu
we're
concordo
giving steps.
plenamente com
Kaká
ele.
commented here, and I
Eu acho
agree
que a
with
gente tem
him.
que ter muito orgulho do
We
que
need
está
to
sendo feito
we
aqui.
need to be very proud of what's
Então,
going on
acho que
here.
também não é trabalho
So it's
individual
not
de
a
cada
individual
negócio,
work
é
from
trabalho
each
coletivo.
businesses, it's a collective
E a
work.
gente tem que subir a régua de
So
todo
we
mundo,
need
ninguém fica pra
to
trás,
put
sabe?
everyone's rules up, everyone's
Eu acho
tabs
que a
up.
gente tem esse papel de não é a
We need
gente
this,
que
we
vai
have
fazer
this
tudo,
role. It's not us.
sabe?
Only us we're doing. Everyone needs to be in this journey.
Thank you. And I think the message is loud and clear. Like, everyone has to do their part. So in the blue zone, we need to have more ambitious, nationally determined contributions, national adaptation plans. And I think we have very willing and prepared insurers and supervisors who are willing to do their part to say we're happy to support that with our own transition plans to support that resilient and sustainable transition. So good. Hopefully we touch a little bit on what you wanted to cover. Any other question from the floor? Yes. Wow. Great.
I
Okay.
already had the microphone in my hands.
Okay.
So
Okay. There's home court bias by CNseg.
Well, Butch, I'm Pedro Werneck from CNseg. My question is, when you design effective transition goal or transition plan, you rely on reliable data to do that. So in Brazil, one of the main sectors which is critical for this transition is agriculture, which is a sector that suffers with lack of data regarding GHG emissions. It's one of the key aspects of that. So how insurers in Brazil can develop effective transition plans when in critical sectors there is still a lack of quality data about that?
Thank you, Pedro. That's persistent or chronic question, or consistent question, I think that we're hearing. Anyone from the panel who wants to share their view about this lack of data, or even if there's something, it's not that the quality is not that good. Anyone? I mean, because we all had to start somewhere, right? So
Also, I can speak. It's Claudia Prats from CNseg.
okay, are you also building on that?
Yeah, on
Okay.
that. Yes, on that. So I have already discussed that with Pedro. I can speak in Portuguese, I don't know. But the point is, Febraban, for instance, is developing like a data for GHG emissions to be used for all financial sectors. And we're going to engage with them and discuss that. Data is complicated for sure, but I think that the inventory is important, but it's like a path. It's not, oh, I'm going to achieve net zero being a bank or being an insurance company. The point is we have to have a path. That's the important thing. And induce good behavior, induce the decarbonization. So this is the path. It's not, the data is important for sure. And we are working on that because Brazil has some specifics, especially in agriculture. But I think we have a path to go. And the more important thing is where we need to achieve, what we need to achieve, not only the data per se. That's the point. But we're working on that.
E eu acho, e eu entendo o desafio, mas eu acho
I
que
know and
ele não
understand the
pode ser
challenge,
uma barreira para você não
but
fazer
it
mais
cannot be a barrier for you. You're not able to
E a gente
start.
também pode olhar para
So I
outros
think we
setores
can
econômicos.
look at the sector of insurance companies related to responsibility and what role that insurance company wants to have to close this gap. And then internationally, what are the insurance companies, the role that they have to help with that? That I think that the insurance sector, because of their broad base, they're in a privileged place to help to diminish of the gap from data. Also, I think it's an important service that the insurance companies can provide. I think the idea is to have a defined path, even though they're not perfect path, but to build upon that path. You can even comment that we from Porto, we have this initiative to start sharing the data. We have a pilot in São Paulo to do this sharing, this data sharing. They're working more and more, not only mitigation of our business, and of course work more towards the adaptation, but to share this data to prevent and public policies and public actions in the regions. And that's a preventive measure. It's a pilot. And of course, I think you know that the done it's better than the theory. Just to go back to the theme, when the stability fund, the rural stability fund was thought about, it was thinking about specifically talking about Brazil. I don't know if the translation will work. We were thinking about the difficulty with the data to model this product. So we thought about the creation of this fund that would help to ensure variation of prices, volatility, that is, and to avoid that this price will be passed on to the premium. And the end of the fund will die at some point, will end, and to end up using regular mechanisms of insurance. But this didn't happen. I don't think that we walked a lot toward this way, our path. We still have a database that is kind of old, but we can do it better in the insurance sector. They have a role that they have to do that they'll like to be seen being done. I'm calling upon everyone's responsibility, and there's a lot to the insurance companies to contribute to deal with lack of data.
Perhaps we cover one last question to make sure that we keep to time, roughly.
Hi everyone, I'm Saloni. I am a researcher, environmental economist from India. We also do emission inventories for India, in fact. But my question was, Butch, you have a very diverse panel here, and I love that. Everybody is doing their own physical risk and transition risk planning in the industry, right? My question is, are those models, the back-end models, the climate science that informs then the products or the alignment that we expect from the industry, are those models across the industry aligned? Or is everybody, say, using their own data or their own modeling? Because then I think it would make a fragmented market for, say, a common problem that's climate change. So I was wondering, since there's such a diverse panel, if we have aligned models or everybody's using their own assumptions and own data sets to kind of create their own transition plans.
Do you want to take that, Catherine? Yeah.
Sorry.
You want to speak in Portuguese now? Okay.
Well, I'll start in English at
Okay.
first.
All right.
We are all, well, I think I can give a general answer. We are all using common methodologies which have emerged at the international level. It's not easy. It's not like the dream. There is no one perfect methodology. We can have some different ones from the investment side and from the underwriting side. But for example, earlier you talked about the PCAF methodology, which is very recognized. We are also following it, using it at AXA. The Net Zero Alliance for the finance insurance also allowed to set a very clear standard and allowed all the main of the insurers to align their calculations and their trajectories. So we are, well, I can tell that today we are quite aligned on the methodology that we are using. There still, of course, have debate. We don't have the perfect data and the perfect answers. It was said earlier that it is a path, a trajectory that, and it's most of all an ambition. And then it's about the implementation and the concrete result, which won't be about having perfect data and scenario analysis, but I believe more it will be about the new services and the offers that we have to provide in order to really impulse concrete change on the field.
Thank you, Catherine. I'm not sure if you heard that, Claudine, or not really. Okay. Did you want to add anything?
I think I agree that there are methodologies that we're all using. I mean, obviously what I can add is that there are gaps. So claims side, for example, there isn't a methodology at the moment on the claims side. So we're working to develop one, and we're going to share that methodology with everyone. But that, I think my point is, if there is gaps and others are working on filling those gaps, don't just keep it to yourself. We need to share it with everyone else so that we all have the same methodology that we're using to be able to define this, because otherwise it doesn't make any sense, as the question pointed out.
Thank you, Claudine, which again makes it very clear that this has to be a shared journey, in a way, a shared agenda where we need to build that ecosystem and infrastructure where people can get that quality and reliable data over time. But what I'm also sensing from many of our panelists is that let's not get perfection to be the enemy of the good here. We need to start with something we have enough to get going, and over time, and hopefully it can be more robust as we go along. But I think there is that we're sensing that in different markets that those who are moving forward with this are not looking for perfection at the outset, but really to learn as they go along and shape their own processes. And I think we have very empathetic regulators like SUSEF who understand that there is a phased approach to this agenda. So I really enjoyed that panel. I hope you did. I think like there's a lot of enthusiasm on this agenda, and something that we can look forward to in the coming years. And I hope next year we will have more of your peers, Patricia, on stage, and also obviously the other participants on the panel as well. So thank you so much to you, Claudine. It's dinner time for you, just in time, hopefully.
Thank you.
And thank you for all of you here on the panel. We're going to take a 10-minute break or 15-minute break before we go to the next session, which is on nature, how to ensure a resilient, nature-positive economy going forward. Thank you so much.
Olá, boa tarde novamente a todos.
Hello, everyone. Good afternoon. Welcome back. Now, please, we invite you to take your seat because we are going to move on, okay? For the next panel.
Vamos então retomar.
All right, please take your seats. Now we would like to invite Butch Buchanan to the stage to present our next panel. Butch, please.
Welcome back. I hope you've had a good dose of juice or coffee and food for the second next part of our program. I missed out that an important segment of the program. And before we go to the nature discussion, we actually have another special presentation for you. We have Aaron from Ulan, the Global Finance Practice Leader of WWF. Aaron was with us last Monday when we had that high-level discussion on insurability. And we wanted to bring that to day 2 because WWF has launched a global protection gap study. And Aaron is here to unpack it a little bit more for us so that we can all benefit from that work. Yeah. 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 Well, you have your slides. Yeah. Yeah.
Do you hear me? Yeah. Good afternoon, everyone. And thanks, Butch, and thanks to the House of Insurance for hosting me a second time to talk about the Tackling Insurance Protection Gap report. So this report was launched on Monday, actually, and it's a policy brief, mainly addressing governments and how what is their role to tackle the insurance protection gap. In January, we will launch a research paper that provides more data, more in-depth information. But this is really the brief for government. So what I wanted to do in the coming 10 minutes is share a little bit about what's in the brief. And if the clicker works, yes, the clicker works. So on Monday, I was in a panel with Laurence Toubiani. And I just want to quote her what she said in that panel about the insurability. She said, the insurance protection gap leaves people vulnerable as extreme weather events hit people hard. Half of climate-related losses globally and more than 90% in developing countries are uninsured. This is no longer just an insurance market issue, but a systemic threat to people's livelihoods, economic resilience, and even financial and fiscal stability. So with that, I want to share a little bit of the context of our Tackling the Insurance Protection Gap report. Because I don't need to tell this room that insurance is a kind of the foundation of economies, right? Without insurance, no loans, no investments. So insurance is really the foundation. But at the same time, we see that climate and nature crises are rapidly undermining the foundations of the insurance system. So if you look at the graph on the right, you see that in 2023, the total loss from weather-related events was 2.3 trillion. And I just want to point out that that number is not just caused by severity and frequency of weather-related events, but it's also caused by the degradation of nature-related ecosystems. So the conversion of forest, conversion of marine ecosystems are aggravating the effects of weather changes. And I want to share a couple of figures that you see on the slide here. So it's estimated that the risk of large-scale flooding event can increase by as much as 700% because of widespread deforestation. And in New Orleans, where we saw the Hurricane Sandy, it's estimated that the total damage would have increased by 625 million if the government of the US wouldn't have invested in a large scale in wetlands upstream and around the city of New Orleans. So what we're seeing is that the insurance markets are increasingly unable to address this issue and keep pace with the rapidly changing climate, but also the rapidly changing nature risks. So the top 19 global reinsurers have more than halved their exposure to catastrophic losses. But also some insurance companies in the US are leaving states such as Florida, California, and Louisiana. And some of these companies are actually becoming insolvent. So the graph on the bottom right, you see that the number of states where insurance companies are actually facing losses. And in Greece, you might know that actually companies are obliged by law to get access to insurance, but they can't get that insurance because of this the risk that is being mentioned by insurance companies. So as I said, the insurance protection gap is not only caused by weather, but it's mutually reinforcing nature risk as well. And that's impacting the affordability. So 15% of Australian homeowners currently spend half of their monthly income on premiums for insurance. But there's also the climate-related insurance gap, protection gap, because of the availability of insurance. So in the US, about 12% of homes are uninsured at the moment, and that's an increase from 5% only 5 years ago. And in the EU, the only 20 to 25% of extreme weather losses have been uninsured at the moment. So that's the graph that you see on the right side. So what is happening in these cases is that the public sector is picking up the losses, right? So that's the risk transfers that's going to the governments of these countries. So in 21, we saw the big floodings in Germany, Belgium, part of my country. And the German government had to compensate about 30 billion of the losses. That was 5% of the federal state budget in that year. And we also seen that 90% of the losses in the weather events in Valencia, but also in the hurricane season in the US last year, were picked up by the government. So these developments, in combination with the further effects of extreme weather events and the protection gaps, are impacting the real economy. So it's impacting the income, wealth, credits, but also the mortgages in the countries what we talk about, and it's impacting the financial stability, very much as Laurence was mentioning. So what WWF is recommending in its insurance protection gap report is the graph that you see on the right side. So we understand that when the insurance sector can't insure weather-related events, we understand that the government has to step up and risk transfers need to happen. But what we at the same time see that these risk transfers also send price signals to the sector that is not really incentivizing insurance companies and their clients to already be more resilient to weather events. So already starting to think about how zoning and landscape planning. So what WWF is suggesting is what you see on the left bar, the blue bar in this graph, which is really addressing the root causes of the uninsurability, right? So that's climate mitigation, but also degradation of nature. So, well, if you want to use an analogy, you can't mop the floor if the tap is still running, right? So you can't mop the floor of insurance with transferring some of these risks to governments, but you also need to look at the root cause and develop policies around mitigating climate change and developing policies and investments in nature. But also governments really need to double down their investment in nature-based solutions. There's many evidences, even in Europe, that if you would invest $1 in a nature-based solution, it would be 25 times cheaper than when you would invest in gray infrastructure. So we really recommend a kind of a whole of economy approach when it comes to the insurability gap. So that's basically, it's a very simple conclusion, Butch. That's basically the recommendation of our insurability gap report. So the report is online. I just want to highlight that this is a concerted effort. So many WWF officers have been contributing to this report, but there was an advisory group consisting of insurance companies, academia, and many other NGOs. So the report can be downloaded with the QR down on my back. And Butch, over to you.
Thank you so much, Aaron, for unpacking the policy brief a little bit more for us. I think you stressed the point on the importance, for example, of addressing root causes. I think the nature-based solutions is something that is very prominent there. This is a brief for policymakers, right? Largely, but what do you want? What do you think insurance companies should be doing?
Right. Yeah, that's a great question. So I think a couple of things. So on one hand, the insurance protection gap also concerns the insurance industry. So we really want the insurance company to use messages like this as a kind of advocacy tool to the governments where they sit and stress the need for more investments in nature. But also when you look at claims and how claims are being dealt, think about build back better approaches by insurance companies. So when the damage has been done, let's not build unsustainable infrastructure back, but let's use the claims to contribute to a greener, more sustainable economy. So that's a couple of examples of what the insurance companies can do.
Thank you. So for all of you listening here and also online, I think it's another very timely guide. That protection gap is a pervasive issue globally. It's also being discussed in the Blue Zone. It's being discussed here a lot in the House of Insurance. And I think you can consider this guide of WWF as another helpful document that you can use for your own strategies in trying to close that protection gap. Any parting words? The next session is about nature positive, the nature positive transition. You want anything to?
Yeah, no, well, I mean, in US, we've seen some really great examples how communities, governments, and insurance companies work together to address climate change. So we've seen how communities are being rewarded for investing themselves in climate resilience. So among other strategies, nature-based solutions, and they would get a reduction in the premiums they pay. So these are small examples that we're seeing, and we really need scaling of these investments in nature-based solutions. And that can only happen when there's a tripartite type of cooperation between insurance companies, local governments, but also communities.
Thank you. And I think that also was evident in the earlier panel on transition plans, that there has to be a multi-stakeholder effort here on each one in the economy doing their part to push this agenda. And I think it was so evident in your presentation that this is no longer a global South issue. It is affecting high-income countries as well. And it is indeed a global issue. And I think there is that agenda here at COP30 that we need to be able to do something to avert a global insurability crisis that seems to be looming out there. And so thank you for your thoughts, Aaron. And we'll get going with the next panel on nature.
Thanks, Butch.
Thank you. So you've had two gifts already today. The first, the transition plan, the total balance sheet transition plan guide. And now you have also the WWF policy brief on closing the protection gap. I wanted to start the next session with a bit of a background on the work of UNAP on nature. I'm just trying to see whether the slides are working. As a preface for our panel. Okay, great. So I think it's already been evident in many sessions that, including talking to many scientists, that if we want to have a safer landing, we need to be able to solve the climate crisis and the nature crisis. So it's very symbiotic. We can't solve one without solving the other. And that's shown already by science. We have global frameworks over recent years that have already been produced to address the nature crisis. And we already know what are the drivers of nature loss there, the top 5 drivers, including climate change itself. We can also see the impacts of the nature crisis across sectors and people. And if you simply translate those about crop production, emissions, disease into lines of insurance business, I think we can immediately see the relevance to the insurance business. Globally, the flows are not going in the right direction. Just like on emissions reduction, it's flowing more to nature negative activities than nature positive activities. So this concept of a nature positive economy where we halt and reverse nature loss and achieve full recovery by mid-century is where this agenda of a nature positive transition comes from. And at UNAP, through the work of the Principles for Stable Insurance, we've been working on this actually with insurers over the past decade or so. We've been looking at nature-based solutions as a way of ecosystem-based adaptation in 2014. We've looked at illegal, unreported, unregulated fishing and its links to marine insurance and how that could be addressed, plastic pollution, environmental pollution liability, and so on and so forth. So what we did at UNAP is we formalized that agenda through a working group for nature last year. And this working group for nature has resonated so much with the global membership. We now have around 60 insurers and also civil society organizations like WWF, IUCN, Finance for Biodiversity, the Cambridge Institute for Sustainable Leadership, along with insurance associations and also regulators who are part of this global working group for nature. And what it has done, it has articulated what are the key benefits of nature actions for insurers, be it on adaptation, reducing greenhouse gas emissions, and also the opportunity sides of new markets for insurers to be able to underwrite going forward. So this has been a process of formulating a very coherent and compelling agenda on what insurers can do to really accelerate and scale up the nature positive transition. And we're also getting more sophisticated. We are looking at it from the different segments of insurance. So you can see on the non-life perspective what we think are increased important elements in terms of the impact on extreme weather events, how resiliency of nature is impacted, and what are new potential emerging risks from a non-life perspective. And I think some of those Aaron mentioned earlier in terms of the risk reduction benefits of nature, for example, mangroves and flood damages, etc. But it's not only a non-life discussion, it's also a life and health discussion. Degraded ecosystems and destruction of nature also and pollution also affects human health. There's a lot of things that could be impacted by a degraded ecosystem, and also a lot that could benefit from a healthy ecosystem for life and health insurers, including access to medicines and new drugs that could be useful to address different diseases. So what we've done is we've now, the Working Group for Nature has now identified their 4 priorities to really advance insurance practices that support a nature positive economy. And those 4 priorities are there. We are in 1 and 2 already, and we're starting to look at 3 and 4 in terms of integrating nature into core risk management and underwriting frameworks and scaling up opportunities. So what has the working group done since last year? They've done a lot. They've done, for example, if you are an insurer and you don't know where to start in terms of setting priority actions for nature, this guide that was produced in December last year is a really good starting point for you to get going. Just like in the earlier session on transition plans, a lot of the frameworks out there on nature have touched on finance, but somewhat hasn't really covered insurance properly. So a lot of the financial frameworks normally are oriented towards investment and lending. And of course, investment is relevant to insurers and institutional investors, but the underwriting part is typically neglected, or if it's covered in a very shallow way. So what the working group has done is to then close that gap by producing guidance on how, on a portfolio-wide basis, you could assess nature-related dependencies, impacts, risks, and opportunities for you, for your underwriting portfolio as an insurance company. And it looks at what's available out there and leverages different standards and frameworks. Today, we're also happy to do a COP30 global launch of this new guide that takes off from the earlier guide that was produced on helping companies perform nature-related assessments by giving practical examples that insurers can use. This was already initially launched in Brussels last month, but we wanted to do for a European roundtable, but we wanted to do a global launch to show you a whole global community on another resource that can be used for insurers to start performing portfolio-wide nature-related assessments. What's good for us is that based on this publication and the earlier publication, we've already gotten feedback from insurers in different jurisdictions that they were already able to perform the first ever nature-related assessment for their underwriting portfolio based on this guidance. So again, we need to go to implementation. This is a COP of implementation, and this is a how-to guide for you to be able to do that if you haven't done it for your company. And I think that's it for the introduction. And now I'm happy to start the panel. And I'd like to call our distinguished panelists. We have Chip Cunliffe from the Ocean Risk and Resilience Alliance. We have Frederick from Carbon Pool in Switzerland, Aurelie from AXA, Hiroko from MSA and AD in Japan, and Monica from MAPFRE in Spain. So I'm happy that I remembered all their names. But it's truly an international panel, and it's great to be able to hear their perspectives on this agenda. Let's start with Aurelie to hear what AXA is doing on nature. And you are also part of the PSI working group for nature, Aurelie, but there's a lot of discussion already on climate, and we know that climate and nature are two sides of the same coin. Somehow, in many discussions, nature is secondary, but it would be good to hear what is the perspective on AXA on nature after all of that input that we've already shown you.
Thank you, Butch. Yes, just to start, it is true that, without healthy ecosystems, nor human society and neither business can strive sustainability. So as an insurance company covering both people and also business and economies, of course, nature is material. So climate was the first real issue that we saw because it has also direct impacts on our activities. But nature now has really grown, especially because nature-based solutions are key assets to reduce risk as well as mitigate climate change. So we have integrated into our sustainability strategy nature and biodiversity. And for that, first of all, we need to train our employees, our different families to really understand what is at stake, and how we can move forward from all the value chain, meaning prevention, risk transfer, and claims management. So first, we start by training and transforming our own businesses. But how long do I have? Because 2 minutes now?
Yes.
Well, okay. Well, because it's a very long story, so...
Yeah, give us a short version.
So first, yes, training, and then we need to engage with our client. And we have, at AXA, we have all kinds of clients, from very large corporate to mid-market and small companies, and even directly people. So we need to engage with them at different scale. And so for that, we have built specific training for our different type of client. what we can do as an insurer is to provide also dedicated insurance solution. And I think we will go back further on that. Dedicated services. And as a global insurer company, our goal also is to steer and shape the insurance industry. And this is why we are very happy to be part of the Nature Working Group with the UNEP PSI.
Thank you, Aureli. Since we have a big panel, I'll try to get down the line first so that making sure that everyone is get to speak. Why don't we go to Japan? Hiroko, it's great that you've come all the way to Belém.
Yes, it took like 26 hours to come here. Yes, in Japan, we're having a very heavy rainfall as other places all around the globe. And we are really having a very financially and severely affected by these rainfall. And when you look at these losses, as WWF has mentioned, we are, suffering that loss not only from the climate change, but also the degradation of ecosystem as we are, having too much urbanization in changing the land use, so that the flood losses are, getting worse and worse. And then when we analyze the TNFD dependency and impact pathway, we really realize that what we invest or what we insure, we really accelerate that kind of urbanization. So we enable many business activity that ruins the ecosystem, and then that really affects our losses. So we really have to be mindful of these consequences. On the one hand, you get losses, and then the other hand, you're underwriting these kind of negative impact. So these kind of analysis we do, it's not just disclosure, but really, as you said, these kind of result we should penetrate to our employees to understand the impact within our business.
Thank you so much, Hiroko. So I can already sense a small trend of, number one, there's conviction in those companies about the importance of this topic, and also greater increasing clarity on why it's so important and material to their business. So let's go to Monica from Mafre and hear what she has to say. It's okay.
Oh, already. Okay, so I'm going to turn to Spanish. Primero que todo, agradecer a la Casa del Seguro y realmente y estar aquí con Batch es una oportunidad genial. Creo que estuvimos hace 3 años en el Summit del área financiera.
We've been 3 years in the financial parts and talk about more of the climate change. To be here to talk about biodiversity is a fundamental team and important. We from AFRI, we have a milestone description that we were working on parts of the climate change, and now we're working, including everything that has to do with the solution based on nature. So this milestone of investment, it's orientated not only to what we subscribed or that we invested, but how we follow the companies in this process, transitioning process, decarbonization, also transition, how conserve the ecosystems. Example, that last year, one of the clients that we had, that we worked together to develop research and on the reefs and the Yucatan Peninsula, since we were able to preserve, so in a way that wouldn't be that the tide will go up, that will be reduced the exposure of the risk that we had. So this process to include solutions based on nature is advancing. Still not part of the process, but we have a strategy, compensation strategy of the greenhouse effects What's prioritizing the solution based in science. So since we invest in reforesting and we avoid the deforestation, it has everything to do with the economy, blue economy. On the other hand, the investments part, we're developing bonus, which allow, generates and mobilize investments for solutions based on nature and what it has to do with the renewable energy, biomethane. We have a biomethane fund. It has also two components, which is very interesting. That's not only to generate fuel, but also generate work opportunity, employment in the rural area in Spain that are being, as you know, in Spain, there's an effect happening in Spain and the whole Europe, and the effect that people are concentrated in big cities, that they go away from the countryside. They're migrating from small cities. So what happened in these fires the last week and this blaze in Galicia happened with the lack of non-conservation of this ecosystem. The fact that there'll be a blaze so strong that everything that has to do with the forests and with the land, everything was deteriorated. So it was easily consumed by the fire. So like we were trying to follow in this process of adaptation, of change. You have a strategy based on something that's very strong strategy for the evolutions that they'll be integrated in the strategy of the company. It needs to be, like you said, at the beginning, with this strategic plan. Us from AFRI, we believe that the sustainability on the to develop things and to follow the process, and we are helpers here in the team for the business.
Thank you so much, Monica, for those insights. I think for Spain, you also made it very evident on why this is so relevant, and the recent events that have happened in Spain are a testament to this. So it's not, as I mentioned earlier, these events are not anymore events that are happening simply in the global south. It's also increasingly happening in high-income countries, including Spain and others, like what Aaron mentioned earlier. So I think for you, it's even more stark that you have to act on it because it's already contributing to a lot of the things, the disasters that you're seeing in Spain. I think you also touched on both terrestrial and the ocean. So it's a good segue to Chip Cunliffe, whose work is totally dedicated to the ocean-based solutions, right? So, and the ocean economy. So, Chip, do you want to share a little bit more on your work at ORA, the Ocean Risk and Resilience Action Alliance?
It's a mouthful. I apologize. Sort of my fault partly. So I am co-founder and senior director at ORA, and I used to actually work for AXA, where I was in the insurance industry for 10 years or so, and really started up something called the Ocean Risk Initiative there, which started to understand and value the ocean as an investable, but also a resilience opportunity. And so ORA itself is a multi-sectoral membership organization of 130 members, from governments through to the insurers, banks, the civil society and scientific community as well. And what we do is we pioneer finance and insurance products to invest and invest into coastal nature-based solutions and the ocean. And I think what we're all becoming, or is now understanding, indeed even in this forum here at COP, the ocean is becoming an investable proposition, but also an understanding of how important it is in terms of climate stability, food security, the resilience benefits that it provides as well. But I think one of the big problems is a lot of people, or maybe perhaps a lot of organizations and indeed governments, not understanding how to value the ocean and the ocean and the nature that surrounds the ocean as well. So I'm talking about things like mangroves, coral reefs, etc. And it's those kind of ecosystems that do provide that critical first line of defense for those likely to be on the front line of climate change and indeed ocean risks, more specifically in the global south and in SIDS. And what we are working on, and in fact have been working on for a little bit while now, is, and with some funding, with funding from AXA and the UK and Canadian governments, is something called the Coastal Risk Index. And that, and I'll go into a bit more detail afterwards, but that's basically saying that there's $363 billion worth of assets at risk behind these ecosystems. Now, if you were to take those ecosystems away or they were degraded, then of course the risk profile of your assets will substantially increase. And it's not just about assets, of course, it's about people. And it's about, 14.2 million people will be impacted by the degradation of those ecosystems as well. So with that information, that kind of information, insurers can, and not only insurers, but investors and indeed local governments can utilize that kind of information to better price risk in the first instance, but also to better manage those ecosystems in the long term, because they will provide that long-term resilience benefit for anybody and anything that sits behind them.
Thank you, Chip. I think you also touched on a few interesting points there. One about the lack of understanding and simply appreciation of the value of nature, especially if you don't see it or if you're not close to it. So even though I'm living in Switzerland, I'm a Filipino, so I am a scuba diver, so I know what a reef looks like, and I can understand the value of that, whether it's regulation of storm surge or simply for livelihood purposes for the coastal community in the Philippines. The other one is quantification and actually putting a number around nature for the various benefits. It's not only risk reduction, actually, it's also the provisioning services of nature, the regulating services. There are also cultural benefits. So they're different, but even singling out simply the regulating services of nature on flood control, on carbon and filtration, I think this is really important to get the numbers around it. Otherwise, it becomes, in a way, fluffy discussion, right?
And I think that's around investability. It's about understanding what is investable and how is it investable, and then how do you take that? It's ultimately being valuing nature as it needs to be valued, and I think that if you can add carbon resilience benefits and all the other sort of elements, as you just said, and I think actually the cultural side of things is really critical, because ultimately, yes, we can have these conversations in forums like this, but actually, what about the local people? What about the people who are being impacted themselves? And how do we connect from this kind of forum to the local level themselves?
And it's true. We can see that here in COP30, that there has to be that social cohesion and inclusion to make sure that local communities, indigenous peoples are part of the solution and part of the agenda as well. Let's move to Frederick at Carbon Pool. I remember in 2008 at UNEP, we wrote a paper about how to make forests more competitive in carbon markets. And one of them was to address this issue of lack of permanence, because if the forest burns or if there's a pest, then the carbon is released. So we were checking who could ensure this. And we didn't find a lot of yeses for many years. And recently we bumped into Carbon Pool and a few other entities right now who are starting to get into very bespoke solutions that are addressing both climate and nature. So, but I won't steal the thunder from Frederick to explain what Carbon Pool is doing.
There's no stealing thunder when you give me such a good introduction. Thank you, Butch. And I particularly appreciate the introduction because it is very much at the origin story of where we actually come from and why we exist. And the reason why we exist is we're all insurance people and we're asked a very simple question by a project developer who was developing nature-based solutions, afforestation, nature restoration all over the world. And that very simple question was, can you insure my forest? And we said, well, sure, we can. I mean, everything is insurable. You might not like the price. We can do some modeling around it. But almost everything that you could put a probability to and that you can assess what the damage is, if it happens, you can insure. So absolutely, why not? We started looking into it. And then the next reaction of the gentleman was, yeah, same thing again. You insurers are completely useless. And we were slightly taken aback by that. And we started unpacking what did he mean by useless. And by useless, he meant that by insuring his forest in cash, we weren't solving the actual problem, as we weren't actually indemnifying him for the damage that was caused. And that was a very interesting insight because normally, as insurers, almost every single problem can be solved with money, right? Someone insures their car and something happens to the car, you give them money, they can fix the car. There are a few fringe cases where money doesn't cut it. Like when you're on the roadside, you need roadside assistance. You don't want the insurance company to send you $150. You want them to send you a tow truck. And what we're doing is very similar to the tow truck in the sense that we pay out claims in the carbon that was lost. So we look at nature-based solutions and we essentially insure them for two main risks. One is failure to deliver carbon, in which case we replace it with other carbon. And the other risk is reversal, as in something that was supposed to be there, carbon that was supposed to be sequestered is re-emitted. And we also make that good with carbon. And the reason that is so relevant is because it touches on two fundamental challenges that we have in scaling nature-based solutions through carbon markets. One is the issue of permanence. It's a credible solution to permanence. And the other challenge is financeability. So we work with a lot of banks and large project developers to figure out the right structures where we can use the fact that they can maybe sell some of their carbon into long-term offtakes. We back them with delivery guarantees in carbon, and in combination, you get something that banks could finance, and that is a key lever. We were talking about investability. It's investability, and then it goes further, de-risking and getting and mobilizing lower costs of capital buckets. And that's at the core of what we do. And to your point about the beauty of nature, this is not just forests. This is also relevant for blue carbon, where we can look at very similar things. Unfortunately, we haven't found a solution for coral reefs yet. But I've been to the Philippines, and the reefs you see in the Philippines is one of the most beautiful things you can see. And I would encourage anyone, if you have the chance, you don't have to scuba dive. You just have to walk out and you'll see things that you couldn't imagine.
It depends on where you go. I've seen reefs like cemeteries because of acidification or bleaching or dynamite and cyanide fishing, unfortunately. But in the healthy reefs, it's paradise, right? But yeah, since we touch on that, I can see we have 24 minutes. So I'm gonna ask, since Frederick triggered off innovation, each panelist very briefly, your favorite example within your company of how you're really supporting the nature positive transition. It could be a product, it could be a service, it could be an approach. I think we all know that we need a portfolio-wide approach, but share with us what's your favorite example where your organization is really, you think is really supporting this agenda. And we know it's important, outwardly, what you mentioned, that people have to be upskilled. I think that's so important, upskilling on nature. In the earlier panel on transition plans, the board had to be upskilled as well on what is a transition plan, what's net zero, what's a just transition. But I think, why don't we have some concrete examples of what do you think are really is moving the needle in your company and also in society? Why don't we go back to you, Aureli?
Thank you, Butch. So actually, the board has been trained a few weeks ago, dedicated on nature and biodiversity. That was an exciting exercise. But what I would like to share with you, and is my favorite product, has been developed by AXA Climate. It's a nature-based insurance solution. So natural assets solution are insurance policies that aim to fund directly nature restoration, repair and restoration of natural ecosystems after extreme weather events. So particularly, and because Chip is here, those marine ecosystems that are triggered are coral reef, mangroves, but can be adapted to seagrass as well. So parametric insurance are really, a case-by-case exercise, depending on the location, the type of peril we want to cover, the value of the assets. So this is also an exercise that needs to be done to value the assets compared to the investment put into the restoration or the cost of the value with the risk without those natural assets. So it's quite a long exercise, but we have already true cases, live cases in Philippines. You know that now we cover more than 80 MPAs in Philippines against cyclone. We have good example also in Latam, in Mexico, and we cover also the Mar Fund. So bleaching, extreme temperature wave can be also triggered because it triggers corals bleaching. So parametric insurance is never-ending story. As you said, also everything can be covered. It takes time. It has a cost, but I think we can be very proud of this type of product.
Thank you, Aureli, for sharing your favorite example at Axon, how you're pushing this agenda forward. And I'm happy to volunteer for other projects in the Philippines when I'm there. Hiroko, what's your favorite example at MSNAD?
Okay, so I will go to another angle of an insurance company. Well, maybe it's not, maybe we won't call it innovative, but I think that the core strength of the insurance company lies in the capacity to reach out to the many diverse stakeholders. And one of them are like corporate clients. And as for net zero target, we have a KPI to the Japanese domestic corporate clients. We are going to reduce 37% of their emission, which is our scope 3 in 2030, a 37% decrease. And then when we set that target, we moved our corporate sales staff to engage with our corporate client. And then we have many dialogue, of course, about net zero, but also the nature positive conversation starts. Because as you know, a Japanese company, we have like 200 corporates are adopting TNFD. It's significantly supporting nature positive concept, Japanese companies are. And then as we have our members in the task force, it's our strength in nature positive. So we provide a consulting service to our corporate clients what the corporate should do for nature positive. And that is not just our, solution selling, but that is strengthening their business models' sustainability. So I think it's a portfolio approach for us that supports our corporate clients that will, ensure their stability and also our stability. So I think these are some of the actions that insurers can take because we have a lot of connection with the corporate clients.
Thank you so much, Araujo. And I think it's good to hear these diversity of answers because we're seeing what are the different levers for an insurance company to drive the nature positive transition. So you can go from insuring and financing the transition to engaging with your corporate clients to also move the needle there. It doesn't always have to be the actual product itself. It could also be that insurer engagement with clients, just like what insurers do as active owners in investment management. Monica?
Gracias, Bach. Nosotros estamos a punto de lanzar y ese es, todavía no puedo decir si me siento orgullosa o no, pero estoy muy orgullosa. Estamos a punto de lanzar el bioseguro, que es un producto para protección de la floresta, para fomentar que haya generación de bosques y conservación de bosques, que vamos a lanzar el 18 en el panel. Los invito además a todos. En el panel del 18 vamos a tener la explicación por parte de nuestra área
So
técnica.
it's part of the technical area on what is going to be done. So we'll be releasing in the 18th. We are very proud of doing that, on taking the next step. On the other hand, we have a reef protection program in Mexico that has developed. This happened in the past 5 years, and what its insurance is looking for is that it is looking to assure the cultive of reef in Mexico. So that is something that also is something that I'm very proud of. And there's also another important subject that we have, and allow me to talk about this, which is education. We are working at MAFRI on how to be able to, well, the explain is called MAFRI Explains, and it's what we can do at levels of adaptation and what we can do at the levels of mitigation. Every single one of the employees in the different business areas are working on that, on how we train people to find new solutions in terms of what is going on, to be able to work preventively and adapting towards that.
Thank you so much, Monica. And I think you also, on that last point you mentioned, you also mirrored what Aureli was saying at AXA, and also actually pretty much everyone, that there is this continuous improvement and upscaling that's happening. And the more you understand and value and are able to quantify the benefits of nature, the more that you can also seize new opportunities to support that transition. Chip, before we go to the audience, any favorite that you want to share?
Absolutely. So, well, I talked a little bit about the Coastal Risk Index. So I'm gonna head down a slightly different route, which is a tool called Vessel Viewer. Actually, you had an image on one of your slides that linked to an organization called Oceana, and it was looking at IU fishing, so illegal, unreported, unregulated fishing, cost the global economy $20 billion a year. But actually, from an insurance perspective, if you are insuring fishing vessels that are implicated in IU fishing, you're likely to see a higher number of claims in the first instance. But actually, you're also in breach of various regulations by providing insurance to illegal or unregulated IU fishing.
Illegal, unreported, and unregulated.
Indeed. And so we've been working with an organization called Global Fishing Watch and TMT Tracking, and we've worked with 16 insurers within the industry to develop a tool that allows you to track your fishing fleet, or any of the underwriters or the insurers have a whole fishing fleet. you can put in your AIS numbers, and the AIS numbers basically track your vessels, and it basically provides you red flags. So if the red flag, if you're turning off your AIS for a day or 2 days or 10 days or whatever it might be, and they're fishing in MPAs, then that's a massive red flag. And actually something that allows you as an insurer to go back to your broker and indeed to the client to ask a few more questions. And of course, the idea is that you are wheeling out those clients who may be indeed implicated in IUU fishing. And of course, it's a case of reducing your own not only legal liabilities, but your own reputational risks as well. So I think it's a really key and critical tool that can be utilized. If anybody does have fishing vessels in their sort of underwriting portfolio, then please come and speak to me. In fact, we actually have a vessel viewer meeting or workshop in London on Thursday next week, which I'm flying back for. And so yes, it's open to anybody to use. So it will be. I think it's a really interesting and pretty cool tool, actually.
Great, thank you, Chip. And for those of you who are unaware with IUU fishing, just search for it. It's the most rampant thing that you can do in the ocean and destroying marine ecosystems. So, and you don't normally see it because it happens on the high seas. And then before you know it, the entire ecosystems are bottom trawled. And there's also human rights associated with many of these things. So I think what's key here is that insurers won't knowingly insure those things, but they are covert operations and you don't see them. And sometimes they literally go through the net. So, and you want to be able to detect that and make sure that you are not part of that, because for all the things that you mentioned, but it's a great example of what risk prevention can be, what insurers can do to actually prevent these things from happening. Good. Why don't we listen to our audience to hear any questions for, I mean, there's so much diversity here, so many examples. Any question from our audience? I see another fellow, Salzburg fellow here, Francis Bouchard from Marsh, who was with us, with Jessica and Chip. We were all together recently in a residential program.
Yeah, we came up with all the answers, didn't we? But you had at your introductory slides a 4-quadrant slide, and the third quadrant, I believe, was underwriting and incorporating nature into underwriting. And it seems like as an industry, we're still very hesitant to price in the value of the resilience that's created either through the Coastal Risk Index or through restored wetlands, that the benefits of those type of projects aren't reflected in the pricing process. And I just wonder what's keeping us from doing that, because I believe that the moment we can do that and we can do it credibly and do it right, that economic models will emerge that can really start to ramp up much, much more investment in these type of projects. So what's keeping us from being able to acknowledge, reflect, and price the resilience benefits of nature-based projects?
Okay. Good question, I think.
Desde mi punto de vista, yo creo que hemos estado muy concentrados en cómo hacer el proceso de
I
descarbonización.
think everybody was very consecrated about the decarbonization project. And we needed to know how to do that. I think there's also data that needs more information. It's pretty clear that it's important to invest. So when you see the catastrophes that are happening right now in Spain, and not only with forest fires, because we pretty much devastated the protection that had at the river. So we destroyed that. So we damaged the ecosystem. But by doing that, the natural disasters then become stronger and stronger. So obviously, they're going to then have to share the the damages. Lives are going to be damaged as well. So you need to look information on how to mitigate and how, and as I was saying in the previous panel very well, is that these investments multiply. So I think we need more information in order to do that, what you suggested. But the thing is that with all these things regarding artificial intelligence and in being able to understand that the economy wasn't being separated of the social ecosystem, and it doesn't separate as well from the natural ecosystem, I think that we're going to be able to advance more and more in that. And the insurers have a lot of experience with that, which is good news, right? We have a lot of experience, so we can do that. And we are developing products and people are working on that. We have specialists in environmental subjects that can help us and can help these companies to generate more solutions.
You, Francis, for me, like it seems so compelling already hearing from everyone. Why can't we just move on and scale this? Any other thoughts on why what's keeping the rest?
So to me, really, as we said, it's a lot due to urbanization and land planning. So it really requests a lot of stakeholders around the table, and particularly public authorities. Unfortunately, an insurer will not solve the problem. We know perfectly that wetlands or natural assets really help to reduce the risk, but you know how it is, marsh, our policy are annual renewable, and how an insurer, will take the financing of nature restoration, whereas maybe the year after, he will not cover any asset in the territory. Plus, unfortunately, all insurer industry are friends, but we are also competitors. So why AXA would invest for my competitors' insurance? So of course, we do want to develop insurance solution to help to restore natural ecosystems because it's key. We finance. We also have a lot of scientific philanthropy around that. But the insurance industry need to be modest and public authorities need to take their responsibilities.
I second everything you mentioned about essentially it's an incentive problem and the fact that our policies are annually renewable. And ultimately, the value capture of any infrastructure or any natural infrastructure measures are such that if you were to invest into them on the insurance side, you wouldn't really reap the benefits. I saw a really interesting example in a small country population-wise, which is Namibia, where the regulator to fund some. This is not natural infrastructure, but I think it's a good proxy to fund drainage investments in Windhoek, the capital. They got the insurers on board and gave them capital relief, the P&C insurers, by funding some of these flood prevention measures. So I think you were touching on a very important point. There's one key stakeholder that we haven't actually spoken about, which is our regulators, and how we might also need to revisit how we do risk assessment or how we do risk capital on a yearly basis, and how we also think of the more long-term risks of our books and of our industries. Because if we factored those in, that might also create some incentive for more long-term investments. But clearly, it's something that has to happen in dialogue. And I'm actually a very big fan of involving regulators, because when you do that proactively, and if you do it around real topics and problems, they actually tend to be quite collaborative, and a lot of innovation can come out of that dialogue and thinking about how we can solve these fundamental issues.
Thank you, Frederick, for adding that dimension that there is a role potentially for regulators to provide that enabling environment and incentives. Okay, last question. If you like to introduce yourself.
Thank you. Hi, my name's Chloe, and I'm a student in the US. And I was listening to a panel yesterday where they were talking about the framing of nature in the context of insurance. And if we use maybe the word infrastructure, that could be more effective. So obviously with COP, everyone here is, the sustainability person or someone who cares about the climate, maybe on a personal level. So when you're going back and talking to your companies and people who maybe aren't in this space specifically, I was wondering about how you approach framing the benefits of nature and the kind of narrative that you build around that to convince a wider population that this is something that's actually going to bring economic value.
Great. So words, language, and narratives matter, right? So how do we pitch this in a way that's will hopefully get greater buy-in?
So one of the things that we talk about is working from the beachfront to the boardroom. And so a lot of the work that we do is focused on locally led solutions, whether it be looking at developing coral reef insurance or impact bonds for small scale fishes, etc. But actually, it's not just about that. It's around how do you then take it from the beachfront and get the boardroom to realize the importance and indeed the opportunity that may be around the investment and work in this space. And so from our perspective, in fact, we have something called the Back Blue Ocean Finance Commitment, where 8 insurers and banks, so Deutsche Bank, AXA, Mirova, and others, have signed up to this commitment to, on a daily basis, to integrate ocean decisions in their ocean in their decision making. So the ocean actually has a seat at the table. So that is really key. It took Deutsche Bank 18 months to get that through their systems to allow the ocean to be sort of an integrated partner, as it were, in their decision making. So it's that kind, So I think it's a bottom up approach and it's a top down.
Thank you. Any other final thoughts from anyone from the panel on that point? I think Chip also touched on the importance of governance here and how important. I think we've seen it on any of these sustainability topics, be it on climate or nature or the next one on just transition. Most of those who are really forging ahead have a clear buy-in from the top and also buy-in from the bottom. And I think that's how it's moving in many of these organizations, that there's clarity of purpose. It's part of core. It's linked to core business strategy. It's not philanthropy, and it's that what we're sensing that is actually helpful in really moving the needle in a very impactful way. So we've just almost run out of time, and I think, as with always, the nature agenda is something that I think is going to be prevalent going forward even more. In COPs, the most recent COPs I've attended, you increasingly don't distinguish between climate and nature. It's now even more embedded into this COP30 right now. And look where we are right now. We're in the Amazon. So nature is right by us. So I think it couldn't be more straightforward and honest than what it is today. And I think through the examples we heard from our panel today, I hope that nature has become more visible to all of us and how it's actually relevant to all of us as well. Thank you so much. Great. So let's move on to the last session of the day. This is day 2 of a 3-day marathon on sustainable insurance. So for those of you who will be here next week, there's a 3rd day on the 21st of November. But let's move on and go to the last panel, which is, no. All right. Okay, I should join. Right. Okay, here. We were somewhat on time, so I think we can take a few moments. Yeah. Thank you so much. Oh. Okay, that's it, whether you like it or not. Enough photos. So let's go to the last session, which is about the ensuring a just transition. And here, I also want to share another guide that we are happy to launch today about this topic. If we could put on the slides. All right. Okay. Oops, what did I do? Oh, sorry. Good. So let's get going. UNAP Finance Initiative, which is a global initiative made up of banks and insurers. We have a just transition work stream. And a couple of years ago, they launched this guide at COP28 in Dubai on what are pathways for banking and banks and insurers to support a just transition. For those who are unaware about it, on the concept of a just transition, it's basically about making sure that the transition to a sustainable economy uh, includes and not excludes people. So workers, suppliers, consumers, communities. It's very much linked to the Sustainable Development Goals principle of leaving no one behind and making sure that you're also able to maximize social and economic opportunities as we move towards that sustainable transition. There's many things that have been said about this, but in that report, you can see here that there's no one-size-fits-all solution here. There are different circumstances across the world in different countries, in different companies, on different sectors. So there's a very bespoke approach to just transition depending on what company you are, where you are, and in which country you operate. There's also growing reasons on why this is important for a financial institution, whether you're a bank or an insurer, for risk management purposes, for your financial portfolios, whether it's a loan portfolio or an insurance portfolio, how you do reduce and manage risks. There's also compliance reasons for regulation and legal reasons. And there's also obviously business opportunities as well. There are different ways on how an institution can enable a just transition. There's engaging with different stakeholders. I think we've seen that as a common theme across the sessions today. How do you engage with different stakeholders, be it with communities that you work in, or your own employees, or the financial regulatory community, to actually have this active engagement in terms of supporting what is a socially just transition, the importance of financial inclusion, and in the context of insurance, closing that protection gap, and making sure that people are really at the heart of that transition. So we've seen in this report also practical guidance on how and what are emerging practices for banks and insurers that they can use to really embed the principle and concept of a just transition in their core business operations. And one of them is related to the first panel that we had today is how do you embed the just transition agenda into your corporate transition plan? And the London School of Economics have actually given provided this chart in terms of how in your transition planning within an insurance company you can integrate communities, workers, suppliers, and consumers into your transition planning process, whether it's assessing social risks or identifying opportunities linked to the transition, and how you can also have this dialogue and engagement with different stakeholders as you produce your transition plan. So today, this is actually a double launch because in the Blue Zone at the pavilion of the International Labor Organization, this same report, this same guide for Latin American financial institutions is being launched as well. So it's happening in the Blue Zone, it's happening in the House of Insurance. There's no way that you cannot be part of this agenda if you are an insurer. So there's many organizations who are involved here from the insurance space. We have a bunch of actors in the wider Latin American region. We have a couple of insurers in Colombia. We have one in Costa Rica, and we have one in Argentina as well. So it's great to have even the wider Latin American community on this very Latin American oriented guide that was produced today, which took off from that 2023 guide that was produced for COP28. I'm not going to go through all of the key recommendations, but in many cases, whether it was the first report in 2023 or now, I think there's a very strong agenda to commit and to make people part of the just transition as part of your corporate strategy. I think what stands out for me, one of the recommendations is really 4 on driving financial inclusion and closing the protection gap, which is even more acute in the global south, including here in Latin America. And I think we have a panel with us today who is able to hopefully articulate this better for all of us on what it is that we can do to really make sure that the transition is not only about a net zero and nature positive transition, it's not only a resilient transition, but also an inclusive and a socially just one. So with that, we're happy to have our panel come on board. I think we have Sonke from CREF from the Munich Climate Insurance Initiative. We have Mabir from the Federation of Colombian Insurers with us. Do we have Richard here with us? Oh, Richard here. All right. From the World Food Program. Hello, Richard. Do we have Nick Robbins with us? Oh, so Nick is not here. And I know Craig has meeting, but he will try to catch up. So let's see whether, let's compress and see whether, I think Craig is gonna come and I think Nick is unable to join us, unfortunately. Too bad, but Nick is one of those folks who actually have really championed the just transition concept in the international sustainable finance space. But it's great that we still have a distinguished panel with us who can really articulate, hopefully, in very concrete terms, what does this mean to them? So let's start with Colombia, since a couple of the organizations, Mabir, were Colombian insurers. If I remember, it was Seguros Bolivar and also Grupo Sura, okay, who was part of this guide. What is happening in Colombia in this agenda of a just transition, and what is the experience in Colombia on this? And Mabir, it's good that Mabir is here because she's from Fasicolda, the Insurance Association of Colombia. So I hope we can also have a very good view of the perspective from the Colombian market.
Thank you so much, Butch, and thank you everybody to be here with us. I'm going to switch to Spanish because I feel comfortable speaking in my language. Sí, definitivamente esta claridad de comprender que la transición
This clarity of understanding that the transition
es algo en lo que hemos venido trabajando en Colombia durante
in Colombia for last 2 years. But it's a bit strange that we have to do this effort when we analyze the problems that we look about the science we need to do some exercise, abstraction exercise, but sometimes it makes us think that phenomena are separate, that the environment part, it's independent from the social parts, and then really it's not. We work with the risk. We know that the risks are all interconnected. So the only way that we're able to do this transition, effective transition in Latin America, is if we do a just transition, because this is a characteristics with high levels of there are very high, these levels of high economic dependency from the activities for informal work, for these pollutants that generate a lot, and they generate a lot of jobs and a lot of work. So we aren't able to leave everyone behind. The transition cannot lie that disappear these economic activities. How to make these the economic activity transform to work in a way more friendly towards the environment, of course, for the commonwealth, for the well-being of the population. So, for example, when a hurricane, when it hits, or a cyclone, a reef or coral, the correct is that there's a social part that the fishermen, they are not able to get their money out of their jobs. They're not able to live. When a mangrove happens, a fire close to it, has to do with the biodiversity, but millions of people, they rely on that. They're at risk, and they see their lives being at risk because the water source. So we cannot keep to see these problems, environmental problems, without understanding that behind all of this, there's a social reality. And I liked a lot that is in this stage we spoke about these things that they can be from natural disaster, but the consequences and the realization of these disasters, it has a social character and means. And that's what we've been working in the insurance sector in Colombia. I'd like to share with you guys some of the experiences in this point. First, I'd like to comment that one of the companies that are doing with this project, Bolivar, that was the first insurance in Colombia that got the certification net zero. So this has a lot of elements behind the certification. So this was reached to concrete actions, not the efforts only of plantation, but it's important of the importance criteria to understand these are not just accessories and related to the insurance, and how we can do have this proposal that are shared proposal. So when you reach the certification as a compromising some privacy, there's a good way to do business in the sector, health insurance and the insurance sector. There's a region in Colombia also, in the Córdoba department, that has a shore in the Caribbean in the north, a pilot plan that are being led by the Ministry of the Environment. They're participating in the Action Fund and the financing from the European Union. So this is a project that are being developed solutions based on nature, just like the restoration of the mangroves and everything related to and the climate risk that affects the communities and on the shore that they live on that region. This pilot is a strategy that demonstrates the importance of the participation of a lot of players, authorities involved, farmers, fishermen, and have agriculture, people from the agriculture that's part of this initiative. So we're doing a lot of things. We're also
desde fase colda, con el apoyo del gobierno
I'd like to
nacional,
repeat also
Programa de las Naciones Unidas para el
with the support
Desarrollo,
of the Colombian government and the United Nations with the development program, we're doing the innovation lab and insurance with focus and inclusive focus in climate resilience. Last year, we're going to have a challenge of innovation for the development of insurance that allows us to have the climate, especially for vulnerable communities, that we know that they're the people that suffers the most in the effect of the climate change. And this kind of exercise allow the companies and insurance to go through actions to other players. There's a lot of, we're not experts, but a lot of people involved that will work with the communities, with the NGOs, with the entities, and the organization that works with inclusive focus, and we can be catalyzers based on our sector in this process of transition.
Thank you so much, Mabir, for sharing the Colombian experience. I think in many ways, what you're saying is that the just transition is an imperative. It's something that is a must for you. It's non-negotiable. And it also helps me explain our role at UNAP, because when sometimes we get questions, what are you doing on social issues? Aren't you about the environment? So climate change is an environmental issue, it's a social issue, it's a governance issue. The same with nature, etc. So I think and this is also embedded in the concept of sustainable development, where and then environmental, social, and economic dimensions come together. So I think you've really articulated that as a core imperative in Colombia, and I think it's good to hear that there's a lot of things that you can see that's happening in Colombia that we can go back to later on as well. Let's go to Richard, who's with the World Food Program. And as far as I know, I mean, the World Food Program has been so involved in this space for so long, and already and so much innovation over the years. Would be still good to hear. I don't often get to speak with Richard, but I think it's great that another UN agency is here to be able to share what they're doing in really supporting this agenda.
Yeah, thanks very much. Y gracias, Javier, por los ejemplos muy buenos. Yeah, thanks very much. You know, I think for those of you who don't know the World Food Program, we're the world's largest humanitarian agency. Last year, we provided emergency assistance to 124 million people around the world affected by climate disasters, floods, droughts, storms, and conflicts. We started working, as you said, in insurance over 20 years ago now, because we recognized that at that time, half of our operations were in response to floods, droughts, and storms. And we needed more predictable, more cost-effective ways to make sure that finance to respond to those disasters was in place when it was needed. As you said, we've done a lot of work through that time, but I want to come back to this question of just transition and then talk about some of the things that we're doing. You know, there's 2.3 billion people in the world who are food insecure today. 864 million of them are facing extreme food insecurity, and last year 96 million of those were pushed into food crises by climate.
Richard, you need to.
Oh, sure. Yeah. So last year, 96 million of those people were pushed into food crisis because of floods, droughts, and storms. So the relationship between climate shocks and food insecurity is clear to us. When we first started working on insurance, we looked at national level insurance and we looked at micro level insurance, thinking about how to use both of those. And in Ethiopia, I was talking to a woman who was one of the first 200 people that WFP insured with micro insurance after their first payout. And I asked, what did you do with the payout? And she said, oh, it was great. I was able to pay laborers to come and help harvest my field. I'm going to plant twice as much land as I was originally going to plan. I was going to be stressed with the drought, but now I have this payout. My kids can go to school. I can farm more. And the thing that was most important there was not necessarily that this woman had been protected against the drought. It's that she was able to take more risk, to take advantage of the opportunity to plant more, earn more, keep our kids in school and get ahead. And that to me is what I think about when we talk about just transition. The people who have the least means need financial protection and access to other forms of support so that they can take risk, take opportunities, and ultimately thrive in a changing climate. That's always what I'm thinking about. I really think about the role of insurance and financial protection in those three ways: protection, opportunity, and also supporting recovery. So at WFP, we're working at the national and also at the municipal level to put in place protection. Last year, for example, we had $361 million in protection provided to over 6 million people in 37 countries. So we work with governments and our insurance partners to put in place predictable finance so that we and they can respond effectively when something happens. Now, what's really critical there is linking that finance to the mechanisms required to provide assistance after a flood or after a drought or after a storm. So we do a lot of work with social protection systems in Latin America and the Caribbean, and disaster management systems in other parts of the world to make sure that when the money is triggered, it can be implemented. A lot of what we've learned over the years is having the money is one problem, getting it to the people who need it is another problem. And that second problem is the one that I think we all need to focus on more at the moment as we scale up our insurance coverage. It's also really important to think about risk layering at the national level, but also through time. So for example, we saw in Hurricane Melissa this fantastic example of Jamaica having $870+ million of stacked risk finance, which is maybe 8% of the total loss and damages from Hurricane Melissa. We'll see what the final numbers turn out to be. And that's critical. But we also are looking at how to make sure that finance is available right after a disaster as well as before. So we've done a lot of work around anticipatory action and triggering the release of money and actions based on forecasts before disaster strikes. So for example, in Haiti, before Hurricane Melissa, in addition to providing 3.2 million early warning messages with the government, we also released money to 47,000 of the most vulnerable households before the storm so that they could buy food, supplies to protect their houses, and make good decisions before the disaster hits. And then lastly, coming back to opportunity, financial protection is not enough. Access to finance, access to technical support, access to other forms of support are essential for insurance to unlock the opportunities that can happen. We've been doing a lot of work trying to innovate around savings and loans groups and linking those to insurance and risk finance mechanisms. So last year, for example, we had 320,000 people we were working with in savings groups. They were able to collectively save $17 million, access another $10 million in loans, and now we're looking at how to link them to insurance mechanisms at a group level. So there's lots of ways to do it, but it's really important to focus on making sure the mechanisms to get the money where it needs to go are there, and that when we're developing insurance mechanisms, we're thinking through how to create opportunities for people to take risk, to take advantage of opportunities so they can thrive and make the decisions they need to adapt to a changing climate. Thanks.
Thank you, Richard. And I think the WFP is a living example of how you really sees insurance and other and finance more broadly to really be embedded in your mandate on food security linked to, and I think it's almost like it's innately part of your mandate that food security and climate protection is an intrinsic part of a just transition. And I think that many examples you provided there show that insurance can really be a driver of supporting this transition and even bundling it with other financial mechanisms there. Great. And also touching on both micro and macro level types of risk, because this is another agenda. When people talk about insurance, they can be looking at different layers of risk. So from micro, meso to macro. And I think it's good to hear that you're approaching it across the board, basically. Sonke, MCII?
Okay, easy one. I mean, first, let me thank you and the organizers for inviting me, and also so lovely setting up this venue and having these important discussions here in Belém. So that was my first point. Second point is maybe why MCI, you probably haven't heard about the Munich Climate Insurance Initiative. So we were founded about 20 years ago based on some discussions that happened in the UNFCCC around climate risk insurance. And there was an enthusiastic group of people coming together. The discussions have moved a lot ever since. Now, I think we have grown into a global network across the insurance industry, but also other important stakeholders, civil society, government representatives. And we also have a project office with more than 30 people of staff. So looking at all aspects and trying to bring the discussion around just and accessible insurance solutions into the center of the discussions. And I think this is also maybe the mandate for me to come into the into this afternoon's topic. In terms of the concrete work, something that I wanted to mention, and I hope we will have the chance also to unpack the role, is that we are engaging also on microinsurance. So we have a team, and they are a neutral broker between the people, the beneficiaries, the clients, the insurance industry, development partners, to really bring micro climate risk insurance to underserved markets. And we've done this, for example, also in the Caribbean. Richard, you mentioned that together with the CRIF SPC, so the Caribbean Catastrophe Risk Insurance Facility, so that there's parametric cover not only for countries, but also for local communities with the same advantages of a quick payout within 14 days after an event. So just to give you some examples of what we do, and as I said, maybe we can also unpack further the role of that particular instrument within the broader discussions of just transition. The topic prompted me also to think about how does it relate to other streams of work, and I want to connect it to another area, which is called adaptive social protection. Because when we talk about just transition and taking here the perspective, the strategic perspective of a government, it is about strategically including the social protection systems of the countries. And with the social protection systems, I mean all its elements, social protection, social insurance, job insurance as well. And we've worked together with the government of Indonesia, with the planning ministry, to work on their adaptive social protection strategy. And it's interesting because it encompasses both trying to bring together different relevant streams of work within the government. So that could be the climate adaptation policies, that could be disaster risk reduction policies, but increasingly also climate protection policies. And so how can this all be put together? And then Richard already mentioned it, connecting that process also to the concrete financing strategies. And there we come then back to the role of insurance. Not only insurance, but insurance plays a big role in that. And another perspective is also that after an event, governments often have to repurpose funds to immediately meet the assistance needs of affected people. And with the insurance policies and solutions in place, of course, there's also shoulders government budgets for other long-term transition needs that they have. So that's another perspective how maybe the adaptive social protection agenda can fit to the just transition agenda. I'll leave it at that, but maybe we can unpack further in the discussions.
Thank you, Sanke. And first, I think the microinsurance community and the inclusive insurance community, I have a lot of respect for them. I think it's been evolving for several decades now, and people have really been pushing and trying. There have been failures, there have been successes, but without knowing it, without probably using the term just transition, they've been actually living it and actually pushing that agenda in more ways than one, and knowing that it's making a difference in lives and livelihoods on the ground. So I think it's good to set the baseline there and recognize that those efforts are already contributing to this agenda, but also linking the adaptive social protection schemes is really, in a way, a very smart way to see how this could become really embraced by public authorities, and making sure that there's a connection to what's happening in the innovation space that we're seeing from the market in different jurisdictions, and also link this to the wider social protection agenda that's being in designing that also, and making sure that this is also embedded in those social protection schemes. I'm happy that Craig was able to catch up with us. I hope your meeting went well. He's fresh from the Blue Zone. And it's good to see the insurance lead of the Climate Champions team with us on this very important topic. So tell us, Craig, why it's important for the champions to champion the just transition agenda. Yep.
Can you hear me? Oh, yes, you can. I'm fresh because the air conditioning here is amazing. If I'd have known it was this good, I'd have been here a lot earlier this week. I'm not sure everyone knows who the climate champions are, so let me just help explain that. Every year there's a COP presidency, and in 2015, the parties to the United Nations Framework Convention on Climate Change realized that 90% of the heavy lifting to achieve their goals would have to be done by non-state actors. So they created a new role called the United Nations High-Level Climate Champions. And this year it's Daniel Oshpe from Brazil and Nigar Padarai from Azerbaijan. And I'm privileged to be on their delivery team, as Butch said, as the insurance co-lead. My focus there is to help society deliver the goals and actions of the 2030 Climate Solutions Roadmap. That's adaptation and resilience, the whole piece. And critically in all of that is 2030. We're not thinking about 2050, because if we don't hit goals by 2030, we've got no chance by 2050. So it's all about practical stuff that we can get out the door today to help that transition, and also to make sure that's done in an inclusive way. My role is to primarily be a cheerleader, amplify the successes of pretty much everyone in this room, and some of the amazing stuff I've heard even today will be going into my soapbox speech. But we're also helping accelerate pipelines of transition finance today for those that we know are societally important use cases. And we're doing that by unleashing the enabling power of innovative, but already existing de-risking tools, which I don't think we've heard of today. So yeah, I'll just give you two real quick examples, and then I can add other things as you like. But so one example is a bit linked to what I think I heard earlier, but I'm not sure if you're familiar with the Café Seguros program, which was undertaken by Nestle in Colombia. And insurance was provided by Seguros Bolivar and structuring by Blue Marble. And what it did is that it helped smallholder farmers have basically those communities were protected, because Nestle realized that without financial protection of those smallholder farming communities, they weren't going to have a supply chain. The reality is coffee's if you look at the supply chain, there's some big farms, but an awful lot of it's smallholders. So it's strategically important. So they were prepared to put some leadership and money into that to actually increase the financial resilience of those communities. And they did it by very simple parametric covers in case there was too much rain at the wrong time or too little rain at the wrong time. And that actually did make a big difference. There's been millions of payouts to tens of thousands of farmers. And actually, another benefit of that was that it gave those smallholder farmers the financial confidence to invest more in practices that would help them be more resilient going forward. So that to me is a tremendous example of the enabling power of insurance. Another one, which is quite different, but it's also in the smallholder space, is a deal that was done to help Regal Sphere make some investments in a project called Jubilation Seguro, which I don't think has anything to do with insurance, but that's the name of the project, which is an agroforestry redevelopment project in Peru. And the investor there was concerned about a few project risks. They were concerned, would the developer actually become insolvent or just abandon the project? They were concerned with the political risk exposure that they had. They were concerned with the weather risk exposure during the period when it took before crops were going to be ready to sell. So there's a period where the operating costs had to be covered because there's no sale coming from the development during that period. So those 3 or 4 risks were things that basically their credit committee was saying, you know, that the returns might look good, but we have no idea if they're going to happen. So basically a tailored solution was developed by CFC and Howden with a broker, and that gave Regal Sphere the confidence to make that investment. And that's all helping smallholder farmers deploy these agroforestry techniques. And agroforestry is my favorite transition case. You increase the financial earnings from land. It's a great investment. But much more importantly, you know, you create local jobs. Some of these models require 5 people per hectare. Like, we've all lived through a whole period of urbanization. If we end up needing 5 people per hectare to help make some of these things work, we'll start sending people the other way. It obviously increases food resilience, and it also increases water resilience, security. And of course, there's biodiversity benefits. And oh yes, we're at a climate conference, so I should probably say it's great for climate change too. So they're just a couple of examples. If you want more, there's a publication we've recently produced along with Boston Consulting Group and Howden called Rooted in Resilience. It's a great read, and it's been beautifully designed, so it's very pretty too. So if you want to know more, feel free to look at that.
Thank you so much, Craig, and for actually echoing what Richard was saying earlier. In a way, you're saying that inclusion and resilience and through insurance is also very empowering, enabling, and makes even delivers more productivity and allows people to lead even more productive lives, right? So I think it's great to have these examples unpacked. I want to be just and inclusive and make sure that I check in with the audience as well. Any thoughts from the audience? We've had really very practical and clear examples on how insurance and other parts of finance are really able to support this just transition agenda. Any question? Yes, your name and organization, please.
Thank you so much. So my name is Vezdana Božović. I'm originally from Serbia, but I'm doing my master's degree at the Technical University of Munich at the moment. And I'm researching for my thesis, actually, climate risk and insurance among farmers in Serbia. And so I found the panel particularly insightful and interesting. So I guess I don't have a particular person to direct the question to, so it's more of a general question to the panel. But I'm wondering, how do you approach markets where insurance penetration is already quite low, or where trust, especially among vulnerable communities in insurance as a solution, is also very low? So how have you, I'm assuming you probably have come across this many times. So I'm just interested to hear your insights on this. Thank you.
Who's the most eager? Raise your, go for it, yeah.
I can definitely talk about that one, having tried to insure farmers in places with no insurance. It's really difficult. In many markets, what you find is insurance sectors that have strong urban property, life, and casualty sectors. And it's expensive to go out to rural areas to serve farmers who can't afford premiums. So unless there's a major government scheme that's subsidized, it's very difficult to see those markets move forward. I think there's a few things that I would sort of say in terms of like what we've learned over the last 25 years of doing it. When we started, the question was, can you do it? Like, can you insure a small farmer where you have no data, where you can't do loss adjustment, where you have no distribution mechanisms? And I think we've proved that you can. And there's lots of really creative ways to do it. But ultimately, I think you really need to find distribution channels that reach those farmers. And that means almost always that you have to build it on top of other systems. Input distribution, seed distribution, access to finance, credit and savings systems, and other kind of vehicles to make sure that you can put insurance on top of that. I think ultimately for agricultural insurance, I mean, in developed markets, 80% of ag insurance is subsidized. And what we've seen is in large scale markets around the world, India, China, Nigeria, Zambia more recently, the programs that go to scale are government subsidized programs. So there's a couple of key issues there. One is thinking through how to align the incentive structures for those programs so they support more sustainable production. For example, using less chemical fertilizers and more conservation or regenerative farming techniques, and really help make sure that system is driving forward climate smart agriculture. That's part of a solution as opposed to expanding a problem. I also think one of the things that at least we've learned in all of our mistakes is that product design needs to be really driven by farmers and partners on the ground. We often treat policy design as a technical problem, particularly if we're dealing with parametric products, because we love indexing things. But what we've seen is the systems that really work well and that support a just, inclusive transition are the ones that engage community by community and tailor the products, the triggers to the community themselves. And there are really good examples of how to do that at scale, because one of the questions is, oh, that's really hard to do. But you can do it at scale. You just have to really be committed to that and learn from what's happened before. Thanks.
Thank you, Richard. And just as a reminder, we're miraculously ahead of time. So for the panel, we actually have 10 more minutes in addition to that. So don't feel that you're stressed out that you want to say something, but we also have more time to check in with the audience. So, Madir, you wanted to add something? Yeah.
Sí, sobre la pregunta que nos haces, voy a dar una visión complementaria.
Yes, I will give you a complementary view on what we are doing in Colombia in order to approach all these populations that are facing risks and to which offering insurance is not adequate. And that happens because of financial education, right? Fasecolda has been developing financial education strategies for over 15 years. We have a program that is called Vita Seguro. Last year was the first time that the tools on what financial programs, on our financial education programs were taken to Colombian soil, the most vulnerable territories that are affected by internal conflicts. And we did that through an initial agreement. At some point, we were left hanging by some partners, but because of the initial proposition, we were able to get information to communities that are not even reached by the state. So the experience that we had with those exercises is that while people and while communities do not have sensibility enough about the importance of understanding that risks exist and there are effective methods to manage those risks instead of just do some kind of ritual with nature or think that that's not going to happen there, and insurance is a way of giving them peace of mind in face of all these problems. While that doesn't happen, while people do not internalize that, it's hard. Even if we develop products custom made, people won't adhere to it because there's lack of trust. Our industry is a very quiet industry. It's understood most of the time as a financial agent, right? That we say that we sell a promise and that in practice we don't uphold to expectations. But therefore, financial education adapted to territories, communities, and the needs of for people's lives is really important. That's what I want to say. We are doing financial education, and we are starting from the younger people, boys and girls that are on the last years on the school. They are being beneficiated by a program that was created with the Colombia's government that is called Nova Angear. That was a tool, a program that doesn't only talk about coverage and deductibles and premiums, but it's also tells about the importance of identifying risks on everyday life and how to use resources. And implementation of tools in projects like that in schools in over the 45 municipalities in Colombia has shown us that boys and girls learn with the tools and learn how to create projects that incorporate financial and risk management. And those will be the next generations that is going to help to drive forward climate transition. And risk management only learn by the hardships of life. We apologize, we have lost connection. The translators apologize, we lost connection to the stage. So the companies of financing, the different corporations that have within this vision with strategies for education, and it's so good that in terms of financial education, we also have financial education.
You're getting a lot of input for your paper. I think it's great to hear that there's so much that can be done and lessons learned as well from making sure that you can't simply take off your classic traditional insurance product and expect to just sell that to a low-income community with a different profile. You need financial and risk literacy to able to permeate more markets there and communities to better understand the value of insurance and risk management, etc. Any other question from the floor? Okay, Craig would like to add, yeah.
Yeah, I thought it might be interesting to share a view on some of the the opportunities, and then the challenges for insurers in helping accelerate the just transition. First is something that you don't hear insurers talk a lot about, which is climate resilience analysis. So, what's actually going to happen in the future? We sort of know climate change is happening, but how does that change the weather? How does that affect the resilience of a design for a transition to regenerative agriculture? How does it affect the resilience of supply chains as heat increases globally? There's great examples out there where leading insurers, for example, Zurich did a heat stress study for Madrid, the city of Madrid. I see AXA here. They're one of the leaders too, especially in the agricultural space, with a tremendous paper they launched this year, which showed, for example, for a department in France, how the yield on wheat was going to change to 2050 if there were no changes in agriculture. What I love about it is they didn't just have Project Doom. They said, this is what you can do about it. What you can do is you can look at different regenerative agriculture practices. And they looked at no-till. If you look at no-till, actually in that region, given the soil structure and the weather environment, that would actually make it worse. It'd be 2% worse. They also looked at introducing cover crops. That actually would make it 4% better. But actually, if you change to adding a biological fertilizer agent as well, with those two other factors, you could boost the yield by 18%. In other words, 7% better than what it is today. That's beautiful, right? It gives the call to action. You need to do something, and it gives agency. This is what you can do. That's what, as an insurance community, we can do. We're good at understanding risk. We're good at finding ways to mitigate risk. The more we do that, the better we are in terms of helping society meet the transitions challenges it needs. And on the excess heat side, I'm not sure if everyone's familiar with the sewer case study. So this is a union, if you like, of female labor workers in India. And this program has been going for a few years now. And essentially, that union wanted to make sure that those ladies who are often single breadwinners, right, that when the heat was getting extreme, we're talking, I don't remember, it's in the high 40s, right? And they're doing physical labor. That is just dangerous, right? It's just dangerous. So they bought a protection that would mean that those ladies who are trying to put bread on the table for their children wouldn't feel compelled to go out and do things that wouldn't be helpful for them. And that's another parametric example. But that, if we just think about how that could be deployed more broadly, think about supply chain resilience, right? There's loads of industry verticals that have a lot of manual labor in places that are going to become unbearably hot. Doing analysis on that is an important aspect. And also, if you're a bank and you've got lots of SME firms there that are exposed to this, you probably want to be looking at your loan book, right? And you could actually help the resilience of your loan book if you deployed some insurance solutions that would help mitigate the excess risk, as well as hopefully some risk management, which would decrease the value of that risk too. So lots and lots of opportunities, but what does it take to play in this game, right? This isn't normal P&C. So firstly, it needs insurers to think proactively about the design for projects at the design phase, not to wait there for a broker to come in saying, I want this, right? It's engaging with the customer, with the demand side, understanding their needs, and bringing the expertise that we have to deliver real value in the value proposition there. It has to happen at project design phase, pre-financing. You can't improve the finance capital stack after it's been financed, right? It has to happen before. And we're spending an awful lot of time with financiers, with project developers, helping them understand this. And I have to tell you, I've done 200, 300 meetings with people who are of that ilk. And I explain the existing toolkit that we have that can help them do their day job better by, accelerating finance by de-risking it. And every single time they've said, that would be amazing. Could you do that? I'm like, understand agronomy too. So if you're going to play in that space, you need to understand agronomy too. So if you're going to play in that space, you need to access that capability. And the last one, which I think there's good expertise, more expertise than the other two that I was mentioning, but the parametric piece. I think there was the question before, especially with a just transition lens. What do you do when there aren't claims handlers? There's not an existing insurance infrastructure. Frankly, the only way you can do that urgently, quickly, to help the transition, to protect those lives and livelihoods that we all care about, is going parametric. And I think, again, you need a distribution with a partner who's trusted locally, that gives you scale, and actually who can be the intermediary to make sure that the parametric basis risk that's there is actually handled in a locally sensitive way.
Thank you so much, Greg, for also homing in on, I think, one important element that's normally not focused on when you talk to policymakers, for example, which is the risk manager role of the insurance industry. It's not simply the transferring and risk sharing mechanism. It's also that role to better understand, prevent, and reduce risk to begin with. No one wants losses, right? But if we can do that, even better. If we can prevent and reduce, and if disasters and disease do happen, then there are risk-sharing mechanisms that could also support that agenda. So in the last few minutes that we have, I want to just go back to the panel and for a parting shot and go back to day one of our summit last Monday on November 10 when we had Laurence Tubiano with us as our keynote address. So she started by saying that she's happy that for the first time, insurance is in the COP where it rightly belongs, at the center and in the COP and not in the peripheral view. But she also ended by saying, we need to be louder and she wants more. What is that more and that we can do to really bring that scale and speed that we need to really bring risk management in insurance into the core part of the solution set to the climate and nature crisis? So let's start from Sonke on what is that more that we can do?
Okay. Question, how much time do I have? No, I think for this group, there's just transition, the term is basically coming from the climate negotiations. And I think it's also on us to say how this can be brought forward from an insurance perspective, from a risk manager's perspective. And just a very quick example is that in one work that we do together with the government of Fiji is similar to bring microinsurance to scale and to farmers. But that program also has a component where we are ensuring directly social welfare beneficiaries paid by the government and by international partners. And if you do that in a clever way, what you're doing is you're also growing the insurance ecosystem at the same time. You are channeling funding, you are developing the necessary triggers, and you're channeling funding through the insurance industry that can then also grow in these underserved markets. So I just wanted to say this is an idea how a strategy can be filled with life and also where then the insurance industry plays a constructive role. In terms of challenges, what I think is that this all requires dialogue between especially public sector, private sector, and all important stakeholders of society. So it's not only public and private, it's also, for example, the NGOs. This is not a fully bureaucratic technical discussion. And I just wanted to say one thing. We, as MCI, we identified this as one of the central challenges. I think probably this is the biggest gap to how to facilitate that type of discussion. And so we brought about a young professional program. It's called Climber, of people with a focus on the global south, but worldwide, where we basically ask people in the insurance industry or in the public sector and bring them through a year of learning how these things could work, what are the different concepts, also how to be a change maker to actually facilitate some of these discussions that need to happen between these social actors to move concepts, abstract concepts like just transition forward.
Thank you. Richard, what's more for WFP?
Oh, what's more? What's more? I mean, I think there's two aspects to it. One is the scale. I mean, I think we've learned enough over the last 20 years of trying to integrate this into particularly kind of the humanitarian system and national disaster management systems that we need to scale. And that's really a public-private partnership so that we're using our resources more effectively. But I think there's more than that. And Craig, you made me think a lot about this. I mean, one of the things that many of my friends in the insurance industry say to me all the time is insurance isn't just about the financial transaction. We really work hard to understand the risk and then work with our clients to help them manage the risk and reduce the risk so you don't need as much insurance. And I think we need to do much more of that. The insurance conversation tends to get reduced to the financial protection elements. And that analysis is key. And right now we're at an inflection point, I think, where if you look at what we want to achieve, it's being able to analyze our current risks and our future risks to make good decisions about where we need investment and how we transition. But if we talk about just transition, the way the current market works for the poorest people that we try to insure is that rather than thinking about how to ensure that risk reduction and just transition, we load our premiums with an uncertainty load that drives pricing to an unaffordable level, where our pricing is 1.4, 1.6, 1.8 times the pure price of risk. So we're asking the poorest, most vulnerable people to pay a very high cost of protection in many circumstances. And I think we really need to think through how to use the climate change discussions and a notion of a just transition to flip that script a bit. And that means, of course, how we use climate finance and our resources, but it also means being much more deliberate about improving the quality of the data on the hazards, on their impacts, much more deliberate decisions about the extent to which we invest in reducing the risk overall through ecosystems restoration, through conservation and regenerative agriculture practices, through agroforestry systems, versus the amount that we put into the financial protection that is absolutely required to deal with the floods, droughts, and storms that are coming stronger and more frequently for those communities. Thanks.
Thank you so much, Richard. Fasicolda?
Bueno, voy a ser muy corta porque no creo poder decir nada
I'll
más.
try to be as brief as possible because I don't want to go. It's impossible to add anything else here. So many smart things were said. Articulation in building alliances, it's important. It's fundamental in order to approach these challenges. The insurers together alone can do it. Although we have a lot of technical knowledge, we cannot solve anything, any challenge by ourselves. And what I could maybe add is that for me, it's necessary to be the steps in order for us to approach problematics in which insurance will be the tool that will make a difference. Technically, we know that insurance can facilitate, can help to reduce risks, that insurance can also, and we work as active collaborators in order to precisely mitigate risks so that all the risks can be handled. But we believe that it is necessary to talk about the special needs for finance in terms of mitigation, adaptation, and biodiversity. We cannot forget that what we're doing in Colombia has to do with that. We apologize, we translators have lost the audio. So we need to be close to different companies in the different chain value and get them closer to the challenges that are special to more vulnerable communities, to create solutions that are more sustainable, that don't rely so much on public funding, because those things are not always there. So that is something that is important. Another thing, we should try to unite efforts within the financial system. The banking system in Colombia has released an initiative called Simba. Simba from the Lion King from the movie. Our Simba is with, it's not M, it's N. And we don't use a lion, we use a jaguar. But it is a national initiative that talks about nature and biodiversity. And it was an initiative that summons different actors from the financial sector to channel funding for specific projects to take care of nature, thus generating more jobs and employment, so that the financial sector understand the nature of these products, the need of funding, and the impact for the insurance companies in what type of risks could be covered. So the only way to do things when you don't know how to do it, sometimes it's just to do it and do something. Those types of initiatives moves us forward in order to find the best solutions.
Okay, so how do we do more faster? The COP30 presidency have done a wonderful job at helping us give an answer to that. This is the implementation COP. And what they've done is said, we don't actually really need any more innovation. We know what the challenges are. We already have enough solutions. We just need to collaborate more efficiently, prioritize the solutions that work best, and get them out the door. And I couldn't agree with that more, okay? I'm 35 years commercial delivery guy. I want deals to get done that create real impact, right? Because that's change, right? That's helping, the lives and livelihoods that we all care about so much. So the way they're doing it is they've identified something called an action agenda, and there are various initiatives involved in that. And I'm privileged to be a co-lead of one called the Enabling Insurance Breakthrough. And essentially, that's one of the priority solutions. And we have a plan to accelerate the solution being how insurance can help accelerate and enable these transitions that we care about so much. The work we've done in the last year has enabled us to engage with pipelines of transition finance. They're looking to raise $3 to $5 billion in the next 12 months. That's quite a lot of impact from a standing start in a very short period of time. And what we're looking to do is get more resource. And if there are partners who have capability in this area, who want to connect with the demand side to help get their existing solutions out the door quicker and make more impact. And critically, it's not a closed club. It's get stuff done. And my job, as I say, I'm a cheerleader. Any good news, I will shout from the rooftops. And that means that whoever the innovators are, get more business. And that means yet more impact happens. We have a positive ambition loop. So there's an invitation. If there's interest to really get more stuff done quickly by engaging with the demand side, by critically collaborating radically across the value chain, not just insurers with insurers, that is really important, but it's across the whole value chain. The vehicle exists, come join in the fun.
Richard, is that 1 millisecond?
No, I was just volunteering.
Oh, you're volunteering. All right. Okay, good. So you've covered it. So I think we've reached the end of this day 2 of the summit. And Monday, November 10 on insurability, inclusion, and resilience. And today is Net Zero, Nature Positive, and Just Transition Day. The common denominator there is people. This transition is all about people. It's all about you, me, all of us here. Net zero is not simply getting to net zero because we want to get to net zero. It's protecting people from uncontrolled and runaway climate change. Nature positive is about making sure that life-supporting ecosystems are there so we can benefit from it. So I think ultimately, this transition is really about people. And I think it's just fitting to end this second day on that note that we are ultimately, sustainability is about a social issue. It is about the sustainability and ability of people to lead healthy and safe lives.
Muito obrigada a todos os participantes de hoje.
Thank you, everyone, for all participants. I would also like to thank again to our Empowers, Allianz, AXA, BB Seguros, Bradesco, Caixa Seguridade, Mafre, Massima Cleaning, Porto, Prudential, Tóquio Marine. Again, all the lectures and will be available in your YouTube channel. Have a great evening. Have a great weekend.